Good morning, everyone. This is Rose. Today is October 4th, 4 minutes after 9 a.m. All right, so let's begin. Okay. Well, let's take a look at the weekly chart first. All right, so you can see the market has been coming down with two legs from the July 27 high. We'll see this as a two-legged pullback, and it's a deep pullback, wide bull channel, because market has been up since October, and we have a tight bull channel since March. So this could be a deep pullback. They're hoping that they will trap the bears and we'll go right back to the August 18 low. Bears are trying to keep the August 18 low gap open. There's a gap. You can see that breakout test. Sellers waiting to sell once again. But the goal is to keep pushing further down without getting a pullback now, because if the pullback begins, we could easily get back up to the 4300s and further up. So the August 18 low, we might actually reach there. What the bulls want, they want to close this gap, the bear gap, and they want to continue the breakout recovery back up to the first August 18, then get above, and then continue to go up to these highs. So they still see the April-March high from last year, so they want to keep going back to that and test that area. However, if the bears keep the gap open, the August 18 gap, they're going to have a measured move to the downside, and this is what they want. And I've been saying that this area is very important, but not just this area. There's also another area right here. If I just put it like this, I would assume, yep. So you can see the tight trading range right here. Here, it's all stacked, but I was more interested in this. Now I have a similar one on the daily. We're already testing inside of that, but there's one a continuation. Now the momentum is to the downside, but this is still bullish. This is 10 SMA. I use it for momentum. And this is 20 EMA, the light blue. The dark blue is 100 SMA. The gray is 150 SMA. And 50 SMA is the red one. Now, we're still above these, so that makes us bullish. So there's a possibility this is just a two-legged pullback, and the bulls can finally, start to go up. But unfortunately, we're probably going to be staying in some kind of a trading range. We might go up a little bit, come back down. If we get above these highs, bear bar highs, there's sellers waiting there as early as the September 27 high. So even earlier, I mean, they could put us into this trading range, the sideways. We could go weeks and weeks sideways. On the daily, this is the area of interest, tight trading range. It actually extends all the way. Okay, that is acting as a magnet because it's a balance zone. Balance zones, doesn't matter what time frame you're on. That's where the institutions add to their positions or getting ready to reverse the market. That happens to become, okay, look, they actually added their positions, sold, and then back to this area. Then they finally reversed and got a huge breakout. It's now acting as support because it's a structural support. Look how strong this structure is. So if this area holds, that means it's a strong support, and we could be bouncing here. Now, because this is too low to sell, okay, into support, nobody wants to sell this low, so we're probably going to bounce. But the bounce, bears are probably here, back up here, so they're waiting to sell once again and get us down here. So we might actually come back down, test for the second time, then if bulls finally show up, we could use this area as a demand zone, and we could actually bounce. So I think we're going to come back and retest this area one more time. It's just that it needs to pull back and look for a sell zone, a resistance. Now, we've been testing these important areas. I'm going to remove those. There's just too many. This is an important one. That's the February 2nd high, which we broke, and we kept selling. So now we have leg one pullback. Leg two, we need to get a pullback. Maybe this is the pullback and we're in the final, but it's very lopsided. Look at the difference. Look at the tight area between these legs. Look at this large area. So I'm not sure this is all that proportion. So we might need to go up and then come back down. And this is where I like to see bulls come in and test of the highs. Maybe we could finally get back up here. So the double bottom in this area would create a lot of buying. Okay, so this is where the bears buy and the bulls buy. So I think we're going to end up in some kind of a trading range for a while. We're going to go up, maybe come down, then finally start to go up. We haven't trapped anybody yet. However, if the bears are counting 1, 2, 3, they might see this as a wedge, but still, I don't think it's all that well. I do have a target here. I don't know if we're going to be able to get back up to, today I think we're going to get back up to the 42, let me see, 4,300 area, possibly 4,295, 4,300. And if there are any sellers and we start to come back down, this is the bear channel. We have been breaching that channel. This is the bear channel extension area that we might test before bouncing again. So even if we go up today at the open, there's possibility that sellers are waiting somewhere around 4,300 area as early as. I can maybe even a little bit higher. I mean, August 18 is way far away. I mean, that's just almost 4,400. So I don't think we're going to get there quickly. I think market still wants to come into these channel extensions or thoroughly test this area of interest before reversing back up. Okay, so we might be in some kind of a measured move already, and you can see it's not so far away. But remember, right now it's 43.72. So we're just about, so that's say 4,200, about 70, 80 points away from this. We could continue to sell, okay, in here before we reverse back up, but that would put us into the 50% extension of this channel. So I'm looking for a pullback at the open on a 5-minute chart. 4,300 area is, I think, where the sellers are waiting. So that's what I'm going to be watching. And if I see any kind of failure pattern, some kind of a double top, some kind of a wedge top, I might actually sell from that area. So I am marking my 5-minute chart at 4,300. So the hourly, this is RTH. You can see we have a huge gap there. This is last week's range, Monday, Tuesday, Wednesday, Thursday, Friday. I measured the last week's range, and I like to see some kind of a breakout. If market is bearish, we're not done. Okay, maybe with wedge 1, pull back, second leg, pull back. We're in the third leg, and you can see 1, 2, possible 3, but we might come down a little bit more. Market is looking for a pullback to this area and then sell back down. Maybe, I don't know. If the bulls actually do show up, then we have a wedge. The last week's midpoint to the last week's high will be targets. So I pay extra attention to this area. That's why I marked the green. If we start to get above it, I'm going to look for a reversal back down from the 50% or 33%. Because if you divide a range, okay, into 3 sections, all right, once we get inside, back inside the range, and if we cannot find sellers and we might have trap, there's probably some kind of a wedge, okay, we could make a higher low, then get back above, and this is what I'm going to be targeting. this area is, that's for bulls, but still every step of the way, I think the sellers are waiting. So 33% is closer to the 4,300 that I marked on my 5-minute chart. If we exceed, go higher, and then we get some kind of a double top around there, I'm still going to look to sell, but I'm also going to look for a higher low reversal for bulls if they do decide to show up. Okay, so leg one, right, pull back, we went to that pullback, we sold, we made a new low, we're making lower highs and lower lows. Market could go for one more leg down before trapping the bears. So I'm not all that bullish, but we could be due for a pullback. Okay, so let's take a look at the Globex chart. And we could end up going sideways, and that's what it looks like on the daily anyway. So pull back on the hourly could put us into some kind of a sideways market. Right, strong sell right here, and that was the news bar yesterday, and you get a big pullback. Right, so we're testing right here. Sellers waiting, sells down. You can either project that down, but the way that I have projected, I like to measure these gaps. Now, two ways that you can measure this. Actually, 3 ways that you can measure it. That's your 1-to-1. I always look for 2-to-1. So they came close, and then they actually breached it. But when you see a gap here, I like to measure the gap. Okay, so that's here is 1-to-1. You can see right before we pulled back up, that we actually met that target. Now, the other way, there's a huge structure here, right? So I can take that. In fact, I would like to actually take this low. That could get us down to here. So that's still a little bit of extension of measured move, but to me, that's fine, right? The other way, you can measure the bar itself, and there's still gap here. It's all the way to this doji high, then that would be my stop would be above that lower high, and that would be my measured move. Okay, or you can extend it a little bit more. Now you can see either or machines see this as a measured move. Now this is a much better test. Now, big bar, you don't have to put your stop there. Obviously, we're getting continuation. Stop can be above any climax bar. Okay, stop can be below any climax bar and expect continuation. If you put your stop here, say you went long, rather than putting here, you were safe. Came down, and went up. Once you see gap bars, you need to take profit and exit out because it's coming to get your stop. Okay. So same mentality. Remember, go back to L's. Where you put your stop, climax, bar, high would be just fine. There's a gap here, so you can count that, and that would be your perfect 1-to-1 target right there. Everybody got filled there, and then you got a trap set up here. I don't know if you guys can identify it, but when market makes lows, right, but it fails to get a follow through and then takes out that failed follow through bear bars such as this, expect a pullback but a higher low. You do not want that low to take out that low. Once you get that and the bulls actually close a strong body, start buying. You're going to buy the next pullback and the next pullback. You're going to expect a couple of legs up. That right there is a swing setup. And see, this one failed. See, look at this. We made a new low. We made another low, but no follow through. Now, if market goes and takes that high, that's great. But you do not want this low to be taken out if you want to go higher right there. Where is the bull bar and the bears actually taking out that low? So who's getting trapped here? Bulls are getting trapped here as they put their stop. That means market is going for another leg or two down. and you get the leg 1 and the leg 2, but then it's the same thing over and over. Depends on how it balances out. Will give you who's getting trapped there. See, is this time bears were going for it, but we made a new high. We took out that bear bar, but no follow through. Now we do not take out that low, and we get a signal bar. SPY above it, that's your 1 to 1, 2 to 1, 3 to 1 target. 1 to 1 and 2 to 1 target right there. I could, if you measure this way, if you measure from here, right? So that's your 1 to 1. I always change. That's your 2 to 1. That's your 3 to 1. This is obviously London, and I don't know if we actually went to. I don't trade the London session, but this isn't how I trade. Is once I see better, I always go for a 2 to 1 zone. This is what I'm going to measure now because I have follow through. So that's my 2 to 1. I will count in this pullback and close higher breakout bar and follow through. That's my 2 to 1. So if I were to trade is the trap under Asia range and a wedge bottom and a nice trap and higher low major trend reversal, that's what I'm going to measure and go for it. All right. So yesterday, I want to go back to now RTA chart and talk about that. That's my Globex. All right. So yesterday, first of all, we opened within the trading range, and I was posting on Discord and saying it was my off day. I was saying, we're going to open up at the low of this trading range. Do not sell into it. If you sell into it, you will get trapped, and you're going to have to look for a big pullback. And that pullback could actually get us all the way up here. You don't know. So we ended up testing the 50% of this trading range, right around there. But look, you could see leg 1 pullback, leg 2 pullback, and leg 3. Leg 3 kind of got an exhaustion and unfortunately news. I was still long, and I completely forgotten that it was news. And this bar showed up. I just close it. Don't even try to fix it. But then I ended up entering here, fixed it a little bit before I exited. I knew this was going to have to go up because when you get bars like this, okay, obviously it's going to get follow through. It could get a leg 1, leg 2, leg 3. But what it will also do, there are many bears trying to get in. Nobody wants to sell a news bar because it could reverse any second. So what they will do is, even if it is the news bar, climactic bar, they will look for some kind of an entry. They're looking for a discounted price to enter. You see this wick right there, right? It's filling that prior bear bar. That's a gap bar, bar 8. But then it closes down like that. Every other bear they were looking for a pullback to enter, which is a discount. They got their discount. So that means there's a measured move there for me. And this is going to sell. You see something like this. You cannot be looking to fix a position. You're not going to get a break even. This is it. This is where I exited out and I reversed it. And I expected spike pullback and a channel down. Okay, all the way. And then anticipation of this is a pullback of test in the future. But obviously, we're another gap. So you could say gap pullback down. So we're going to test that one first. Maybe we're going to test bar 15 as the pullback. Could be, right? So you got to look at the bar 14. Gap down and a close very strong. So that right there is actually spike or another spike pullback and another channel. So the whole thing could be the spike, this whole leg. So we're going to go there. So I'm targeting the bull bars. And I kept telling everyone, once we start, this right here is a bear flag, okay? But it's a wedge bear flag. This is a pullback. We're going to retest that, whether we're going to test underneath that bull bar or the high or the mid, but we are going to test, and that's where the sellers are waiting. And I kept pointing, expect a wedge here, 10, possibly 17, 26, slightly higher low, 30, good signal bar. There's a trap there, okay? It's not the ideal trap. So now we're running stops right there. So where are we going? And I kept saying target bar 15, target bar 15. But once we get there, look for a spike and channel. This is a bull flag with wedge, institutional pattern, and look to sell. So right there, we've trapped the bulls. I've sold underneath 44 and expected several legs down, tests of the lows. Market is really, at that point, got into small pullback bear trend mode, testing the lows right there. But once I start to see, okay, bars like 58, follow through, small follow through, but hey, small bars are exactly what you want to see, such as 59. I expected another leg. I'm targeting, again, is spike pullback channel. I'm targeting bar 51 and bar 47. So we've tested the 51. There's a wedge there, okay, so, and double top lower high, outside down bar, but it's a bull bar. There's a bunch of stuff happening there. You got is inside, outside, inside, OIO, outside, inside, outside. It's not a good close. It should have closed bearish, but it closed bullish, so you can trail your sell stop. I think that everyone was selling underneath that bear bar at the EMA with 46. That's low 1, basically low 2 set up at the EMA. So that must be some kind of a bear flag. I'm looking for at least 2 legs down. I'm going to put a white stop. I'm going to measure this trading range small. I'm going to double it up. That's going to be my white stop. I'm looking for a 1-to-1 at the minimum, and 2-to-1 is I will trail that stop down. So here's the second leg. Unfortunately failed, somewhere around 1.5 risk reward, and it couldn't go further down with multiple closes, consecutive bear closes. 73, good bear bar, but then you get 74 as an outside up bar. They're trapping these bears. You can see the trap pattern right here, right? We made a new low. That's good for the bears. Hey, we have a lower high, we have a lower low, but then we get this back-to-back bunch of bull bars. Once we take that out, okay, so expect if you're bearish, you want to see bears to test that low and break it and keep selling, right? Because they will have their stops right there. They will move the stops from there to there. They might have already did that as they see bear bars. But these are unsuspected bears. As soon as the bulls actually show you that they're not closing below that, now they're going to target and start running stops. And that's a higher low. Strong bull bars, expect another leg up. Even until the end of the day, there was a trade to be made, and I was trading that. And I was long. I took profit. Bar 47 was my target. Okay, so as we gotten closer to the 47 low and body open, I took profit right there and then. And this was my 1-to-1. Okay, and then I expanded right there. That was my 1-to-1, but it's end of day. You got to take your profits. I can't keep my trades open overnight. I don't have that big of an account. So I said, hey, this is great. I'm just going to take this profit and be done with it. So it's all selling once you get this bar. Obviously, it's always in short. Why? We are below the higher time frame. EMA, that's a 20-bar EMA from the hourly chart. This is 20 EMA from the 5-minute chart. When they line up this way, 20 EMA below the 1-hour EMA, we are bearish. You get a bear bar. Just sell it. Just sell it. Trail the stop above that EMA. Sell, sell, sell. Trail, trail, trail. And expect a pullback. You can sell that pullback. You can measure. Here's what I did. I told everyone, if you're buying the pullback and you've already taken profit here, you're buying into a pullback, either it's 21% or 33%. So let's take a look. Right? Because this is a one big range, that's 0% or 100, doesn't matter. This is 0 starting point, right? So look what the market did. I don't know, it's pretty light. I don't know if you can see it, but that's 33% right there. We tested the 33% pullback, right? Lower 1/3 of, because if you look at it on a higher time frame, this is a one big bar and is one big bear bar. Lower 1/3 is a good place to pull back and sell. We couldn't get to the 50s, so I'm highlighting basically down here. We didn't get down, but we made a new low of the day. Then we have a wedge, kind of truncated wedge right there. When you get this low a little bit higher, market is trying to get back to this high. We're in a trading range now. They want to break that high. Now I want to measure this whole thing. We're at the 33% already. If we close a bull bar, market probably will want to get back up here. Eventually, it wants to get back to the bar 9 high, which is 66%. I don't know if you guys see it, but it's low of yesterday. It's not low of yesterday, it's a low of day before. This is going to update as soon as the bar 1 actually closes. But where market is trying to go, possibly up to 50%, but we're already at the higher trading range. There might be some sellers here, so I'd be careful. I don't like to trade the first 2 bars. I like to get a little bit of reading, but if bulls actually break this, we get 2 bull bars, trend at the open, expect market to get above the 50% and go and test the bar 9 high most likely, but that's where sellers are. There's a breakout test area. Low of is Monday, so also sellers could be there. That's the 66% right there. All right, big bar trying to go to the high of trading range. This could be a leg in a trading range, so I'd be careful there. Bulls trying to reverse back up to 4,300 area. 4,300 area is yesterday's open, just about. We could create a much bigger trading range, but these gaps, bears are waiting happily. They will sell the pullback into these areas. If they don't sell right now, you can see this area is acting as resistance already, but I don't know, this bar hasn't closed yet, so I can't really judge it. As far as the news goes, let's take a look. Today is Wednesday, so ADP employment report came out this morning, which was a big deal right after JOLTS. PMI composite scheduled for 9:45, so we're just about 12 minutes left for that. Factory orders and ISM is the most important, okay? ISM service index. Anytime the news starts with I or P, just be extra careful. Those are market moving events, market movers. So those are scheduled 10. We have a ton of Fed members scheduled to speak today. So today is going to be a rough, but they're obviously trying to reverse the market. They have trapped the bears. They're taking their stops. They ran the stops. Okay, so that's the measured move target. That's conservative. If you put your stop underneath 58, then that is your measured move target. So the market is trying to reach that area. I'm going to put my stop here, so that will be my measurement. We're almost there. This is not a trend line, it's just anchor. That is not a trend line, it's the anchor of what I'm measuring here. Market is still trying to go higher. There's nothing. If you are long, you should stay long. But it's still resistance. We should test that easily, maybe a little bit higher. I don't have the September 27th on my chart, but we are way above it. So, okay, so we're right there. Measured move. Maybe a follow through. It's trying to get up to 42.85 or 86 area, 85, 50, 85, 75 area possibly. Actually, I'm sorry. Let me remeasure that. If we can close another bull bar here, we'll continue to go up to 42.8650 area. But we'll be testing this gap right here. Probably sellers there. All right, so the measured move met, and some machines are already started to take profit. You could see with that upper wick, but a second bull bar closing on its high or above its midpoint is a good sign that we might have a trend from the open. Market is trying to get to the August 18 high, as many bulls bought there, so many bulls will try to break even there. So August 18 high, I'm sorry, low is right here. We are far from it. I think maybe 43.36 February 2nd high could be in the works, but there's a lot of work that the bulls need to do. All right, so that's good. We are continue to go higher. So what else? I can also measure from here. Measured move, that's the target. I mean, I'm not doing stellar job there, but here we go. That is the target. 50% pullback is the target from here, but you can also measure from this high, or you can measure from this high. Then 50% would be a lot more higher. Market still reached that area, which is 1 hour EMA. Measured move right there. So you can, but then, you know, if you're taking this high, why can't you take that high? Why can't you take that high? So I don't like to trade. I don't like to measure this way. I'm going to measure from yesterday's high. There's a gap, or the best I would do probably here, because this is whole leg 1 pullback, leg 2 pullback, leg 3. So this would be where I cut off. So that would be the 50% pullback, and measured move could be there, or if machines actually measured this way, we already met the measured move. I will take profit here, expect a pullback, because you're still in this resistance, right? So measurement is one thing, but where you are on the chart is another, right? So you're testing these wicks, okay? So you know that this is resistance. You have to take profit. If this is a leg in a trading range, we could easily pull back to the 50% of this trading range. Probably buyers underneath bar 2. From the open of bar 2 and the low of bar 2, buyers waiting. It's kind of a failed breakout here. You can see if this is the high and we don't have a follow through. So it's pulling back, but it could be just a pullback to get another leg up. I think the market is waiting for 9:45 news. We're only less than 3 minutes away. Magnet above 1 hour EMA and the 50% pullback. Market quickly reached the 42.8650 area. Or 90 area, but resistance is resistance. So let's see if there are any buyers in the low of 2. anybody's upset here with the failed breakout will try to buy around here and try to get some kind of a break even, because there's already, machines could be counting leg 1 pullback, leg 2 pullback, leg 3, so they see a wedge at the trading range high. This is why I put this in red. It's resistance. So you have to always count how many times the market moved up. Okay, so there's a tight tight bull channel. So first breakout, probably buyers waiting. You got a trend line there. They will try to buy the first breakout probably from that trend line. They will try to fade. So some bulls started to buy underneath too, and to move that bar up. But if that bar takes out the too low, it could continue to come down to the breakout point. Okay, so breakout point right there, right around the open of day today, and then we could go back up. But it's the news, so just be careful. Anything can happen with news. But there's a trend line. If it breaks, there will be buyers wanting to fade that bear breakout from that trend line. You can see it's stalling at the too low, but I think it's just a lot of uncertainty for news. That's scheduled for 9:45. Here we go. 3 seconds. Bears trying to sell and get another leg down. Strong inside bear bar at the high of a trading range, right? They could sell and get another leg, but there will be always bulls waiting here to fade this bar. But I'm not going to touch this because it's very strong bear bar, probably sellers underneath. It's a micro double top with 2 and 3, neckline bar 3, so there's always sellers, sell stop orders waiting there. Plus it's news. I don't touch it. If it wasn't news, okay, so if there was no news, I would have probably sold and looked for a 2.4 point scalp underneath, from underneath bar 3, but because it's news, I am just not gonna touch it. All right, you can measure to see how far they can go from the high of 2 or from the close or low of 3, bar 3. You can see there were buyers there, the upper wick, but it's news. So bears are trying to push towards 42.70 to 42 is 69 area to scalp, but I'm not gonna sell this. I'm gonna wait. I like to wait at least 10 minutes to pass, if not 15 minutes before I do anything with news release. But if you were selling, so it's 73, 71, they got about a 2 point scalp here from under, but it's not enough. Now, why is it enough? Because if you entered, you sold 1 tick below bar 3, it needs to go to 70, 75 to give you a 2 point. It failed. And that tells me fading is starting. And this is why I didn't sell. So this pullback could still sell, but and get a second leg down, but I'm not going to touch it. Because bulls are stuck here. They're buying and they're getting a break even right there. Now, if they do close a bull bar, then we go test the high. That's fading the trend line breakout. If they do close a bull bar, we'll go test the 2 close. but a bar like 3 will want a second leg down. So you can see break even is taking place right now for bulls with bar 4. Bears want a second leg down and a scalp around 42.69 to 42.70 area. So if I'm going to do something and this bar closes super weak bullish, this will be a breakout for bears and a pullback and a sell again. I'm not gonna. This is the now third news bar. Let's see. You're stuck here. You buy to close or one tick under. That's a break even right there, right? We didn't close a bull bar there. But we also didn't close a bear bar. But this bar needs a second leg down. And the bears get a chance of bring market down to this area, possibly even right around here with a second leg. So I did sell now. I sold, and I'm looking for this area, scalp right there. I'm going to scalp. You can also go for 1-to-1. That will be 1-to-1, but only if they close a bear bar under 68. I just scalped it. Okay, so we'll get a bounce here. You have to scalp. All right, so why? But aside from this, I said there are probably sellers underneath here looking for a 425, 4 points and an extra tick. That's a scalp. So you see why I scalped it. Now it can still continue to come down more, but it needs the first bounce and then close underneath 42.68. If they do close below 42.68 with a bear bar, they're going to shoot for 1-to-1. That's around 20 points. That's going to be a 20-point swing for bears. Yeah, look, maybe even 21. That if they're lucky, but somewhere between the 19 and 21. Right, I'm going to mark the 20. So right here, if they close a bear bar after taking some profit here with that 4 point from under bar 3, then you're going to look for a bear bar closing around 42.68. Good bear close would be a good follow through, and we could keep coming down to 20-point swing area. But this is I scalp because this is news. That's your 1-to-1. This is also a breakout test. I did say we're going to test the open of the day. So many ways to look at this. If you're looking at it from the price action perspective, you get a trend line, kind of a trend line break, but they try to fade, ended up becoming a break even for bulls. They couldn't even close a bull bar to get back up here. Bulls will eventually get back up here, because if bears want to swing this isn't a good swing. This is the first sell. It needs to go back up here and create a second sell. Then I would be swinging this for 20 points, 30 points, 40 points down to these lows, because this is my target on the daily. However, we can go up. I'm going to scalp because this is my first entry sell. So I know there are bulls waiting down here. I'm going to look for a pullback. If I get the second sell, I'm going to see if it gets any follow through. If it doesn't get any follow through and we start closing bull bars, I'm buying. So watch out. Now you see what happened there and why I took profit? It's a breakout test. Now they're fading. A little bit of sell. Everybody who sold their stops up here. Bulls want to run those stops. But bears now stuck down here. What do you think they're going to do? They're going to try to sell at these highs, if not higher, but to get a break even. So they're panicking now. If they exit out, if they see this bar close strongly bullish, because that could be very well 4 pullback and 5 second leg and a trap, bulls will try to get a double bottom with bar 1 and bar 5 at the EMA and a breakout. They're trying to get a bull flag. But what happens to the bull flags at the higher trading ranges? They die, right? They don't break out. What happens to the bear flags at the low of trading ranges? Look at that. You get a trap. Bears get trapped with the second legs, and we never take out. So the similar thing can happen if the bears want a swing and keep this gap open. Now is the time to test here and give us a really nice sell signal bar somewhere in here. So I'm going to look for it, because technically this is a second leg, bar 5, and market could go higher here. So it's all about timing, right? Your entries are all about timing. I mean, some people just complain how much words I can pack in 5 minutes. What I'm trying to do is try to listen to what I'm saying. I'm trying to show you from every angle the price action, the systematic scalping, what the machines do and what the machines see. If all that comes together, it's going to tell you, you better take your profit here. It may not come down to the 20 point. This is all you're going to get here, right? Where's the next bear bar? You can't be selling. Even if you were selling and stuck here, you have to exit out because they're probably buyers. That's a high 1. Pull back high 2. So you're in a high 2 above, from above bar 5 here, right? Or you can say, well, I don't want to count it that way because we didn't really go above 4, but 4 is a high 1 because the high closed, but immediately they faded. So there were buyers here already entered. They're trying to close a bull bar. That bull bar comes in, we're going to get more bull bars after that, right? So there's always a trade, but there's also, when there's a trade, there's a trap. Get rid of these. Okay, so we pulled back. Bears trying to get a second entry. I didn't buy. I don't like to buy above bear bars. I don't like to, I like to see a bull close when I'm going for high 2s and such. So why is this bar happening? Anybody sold bearish down here? I was smart enough to take profit, but they didn't. So what are they going to do? They're going to sell the pullback, right? So how do you sell? Where's your limit sell? It's the upper 1/3 of a qualifying bear bar with a really strong bear body. Which bar is that? That's bar 3. So if you divide this bar into 3 sections, right? So that's the upper 1/3 right there. Sellers showed up there, and they're trying to bring it down. They probably are getting a break even there, but they're trying to bring it down back to here. I'm not sure if they're going to be able to do so. However, if this bar closes with a bear body, even if it's a doji but a bear body, that's going to be the second sell signal for bears. But if it doesn't close bearish, I'm not going to sell it because it could go up a little bit more. Why is there between yesterday bar 10, 11, 12, the start of the highlighted box? Well, I think you're late joining the session because I talked about this area is a trading range high. We have a leg in a trading range. Therefore, there are sellers here. Okay. So if the bulls actually break this resistance, we are always in long. We become even more always in long. Then I would look for bar 9 high and this gap area or the bar 1 low to be tested. But before then, there's also breakout test. So this area is another resistance. Only if bulls break that red box with a bull bar, then it becomes, they're going to come back and retest and it becomes a support, and I expect this area to be tested. So what I'm doing there is I'm looking for resistance zones because market has been bearish. I'm looking for areas where bears could sell the pullback. So bar 6 close is the news. Remember, we have the ISM number, so this is a news bar. Anybody who bought above is bar 5 stuck, so they're buying the pullbacks. Okay, so bears exited out. Look, bears exited with bar 6. Why? Because they were stuck. So they sold the upper 1/3 of a qualifying bar with a limit order, exited out. If they do not see a bear bar closing, they may not have exited out. They might be still holding contract and expecting market to come down here. That means they need a sell signal bar here. That's it. So that's a sell signal bar, second entry short from the highs. They activate it. I didn't buy it because we didn't close a strong bull bar. I didn't buy or sell because it's news and it's a big news. Anything can happen. I also didn't buy because this area is looking for a second entry swing. So if that sets up, I'd be very upset. But if that fails and a second leg fails, then bulls can still show up. Technically, this is a bull flag, but what happens to the bull flags at the higher trading ranges? They fail. So I don't know yet. This is now a triangle. We have a bull flag, implied flag, and now bulls are still trying to get another breakout, probably wanting to get back up to this level. This is right here is a 50% pullback, but we need to start getting some bull bars. So the bears know that this is a top of the trading range and the bulls will fail with the breakouts. They're selling, they're utilizing second entries. So measure from one tick underneath bar 6, see if you can get a 4 points there. If you get 5 points scalp, expect more. Next profit taking will be 42.65. So if you're selling already, you better pay yourself around 42.65. Just a little bit of scalp. It can exceed, it can go further down to 42.62 area or 61 area, maybe even test of 60, 42.60, but first they need to take profit here, so it's going to bounce tad a little bit. But since it's a news bar, it's very volatile. Look at the ATRs. It's 8.5. So bars can move 2 times the ATR. It's 16 points to the downside so fast. So I like to pay myself no matter what. And look how it's bouncing. Why is this bouncing? Who will tell me? Anyone who's been watching me since, I don't know, even if you watched me explain this for a month or 2 weeks, you should know why I expected a bounce. This isn't a trend line. This is just an anchor for what I'm measuring, so it's not a trend line. I'm getting mixed responses here, so I'll tell you right now who's right. Steely is right, Andrew is right, Frank is wrong, Jonesy is wrong, is Alex is right, Price Action Trader 88 is right, Corey, market update, dude, smack. You guys are wrong. It's not 20. I know where you're, okay, the reason why they're wrong, okay, they're actually, technically they're right, and I'm going to talk about that. But they are wrong because they miscalculated. They're calculating from here and they're finding 19 to 20 points, and they're saying, this is a follow-through, selling second leg, and it's going to 20-point swing. But what about this pullback? Market moved 10 points. So you cannot measure from up here. You have to measure from here. That puts you to 14, 15 point. See why you were wrong? That's because ATR is so big. When ATR is this big, that means bars are already reaching 6-point to 10-point. But it's because you're seeing dojis, you're failing to measure, you think there's not enough distance there. But there is this distance there. That's where the ATR comes in handy. Okay, that was a good exercise. So you see they're taking profit here. Pullback probably sellers at the lower 1/3 of really nice bar 7. Divide bar 7 into 3 sections, midsection and a 33% pullback. Probably sellers here, even if it pulls back, because it's very volatile. Pullback could be deep, but this bar probably wants to sell. So it could go up to that lower 1/3 level, somewhere around, I think, 42.68 or 42.67.50 area. If it starts to sell right now, it's going to try to get down to 60. So you have a little bit of scalp there. So market is trying to reach down to 42.60 area probably. There's sellers up here. It's a breakout test, 5 low and a big bear bar. So you know there are probably sellers here. Okay, so we did reach the 68. Let's see if there are any sellers here. Anybody who sold the close or 1 tick underneath bar 7 will sell here, and will try to get a break even first, and then they will look for a follow through. About ATR is 8 points, so they sold around 68. Take out 8, it could still move down to minimum 42.60 area. I sold with them, so I'm going to see if I can grab some money bags at 42.60. I actually sold the close of this bar, but I did expect a pullback, so I sold another one up there around 68. Now broke even, and then now I'm looking for follow-throughs. As long as ATR stays at 8 point, I've got a 1-to-1, 1 time the ATR value scalp here, if not more. So 42.60 is still the target. ATR is increasing 8.25, but who cares? I'm just going to keep it 8. I'm looking for 42.60, but I'm going to scalp 60.25. See if I can get it. Almost there. Yes, I got it. So anybody took my sell right here? Did anybody trust me right here and sold? That was also price action trading, double top, lower high, wedge, neckline, pullback and sell. That's a discount entry with a pullback bar 8. So I've scalped the 60.25. It actually went down a little bit further to 59. So I said 60, but bears actually pushed it additional all the way down to 59. Said, let's give them a little gift here. They could get a lot more than what she called. So you should have made some money here. If you're swing trading, that's great. This is your second entry short. Market wants to test these lows. It is possible that this is a wedge top bear flag. Remember, this has been my target right here. So market is trying to reach there. I did say if you just joined and missed the morning recap, what I was looking for, I said I'm looking for a pullback. Look at the pullback. Pullback to my channel lower line, and market could sell. And I said I want to see a good test, a thorough test of this tight trading range, and I explained the importance of it and why bears could continue to sell. So eventually we will pull back to the 4,300, but if market is not ready, I will just go with what they're doing. So I expected a second sell It came in a little bit weird. That's actually bar 6, but it's a doji. And here's a little tip, which is not in the Brooks trading course. But Al calls them as sell zones and buy zones. I call them demand zones and supply zones. When the market is selling, okay, is a little bit of pause right there. If you have consecutive minimum 3+ bear bars, where that leg starts creates a supply zone. You're not going to sell the first one. It might only give you a 5-point on the 5-minute chart. But the second sell is where you want to enter a swing, which will get you minimum 10 points, if not more. Okay, so that's what you want. And you want the first sell, you want the second sell. That's your swing right there. And they come in the form of bear bars like this. It's better. Or bear bars like this, doji, or a bull doji. Doesn't matter. That is a sell signal. Dojis or strong bear closes are sell signals, not the bull bars. See, bar 6 was basically that. Second entry long, bull flag buyers trap because they think that every second entry is a good one, and we have a double bottom with bar 1 and bar 5 low at the EMA. But bull breakouts, bull flags fail at the high of a trading range. Therefore, this is your early entry from underneath 6. You trail your sell stop, and you get entered early with bar 7, news bar. If you sell the close of a news bar or any bear bar, forget about the news, okay? You're going to get continuation. There's a scalp for you. But I like to sell a little bit. If I see a strong bear bar like that, I'm going to sell a little bit higher to get a better discount price. And that's what that is, 8 high, right? So this is basically a supply zone, but it is a tired one. So this has been tested. Look, they tested and sold. This is a swing right there. That's your second entry, look, right there. 44, really nice bar, right? Now we'll test it again, right? So if you actually sold somewhere in here, market made nearly 20 points there. But it is now tired. Bulls want to break that. Bulls want to eliminate this bear flag, and they're trying to trap. Remember my early trap? I said market makes a new low, makes a low, makes a new low, then goes back and makes a new high. Everybody starts to buy, they put their stops here. Then market either takes that out, comes down, right? Everybody's nervous because they don't do white stops, which they should. They should take this range and project it down. Stop should be down here. And then they're scared, so they actually voluntarily exit out of the market because they don't want their stop. And then when that happens, it just goes right back up. So now they're fueling, these bulls are fueling the bull bars, the market. Now they want to go up and take that out. This is where, if these bulls have not yet exited, okay, I'm sorry, bears have not yet exited, their stops are here, right? And the bulls who bought, right, so they're voluntarily exited. So they're bulls and the bears exiting the market, and they realize that they're duped, right? Bulls are duped, so they enter the market. Now the bears are like, oh no, it's come to get our stop, right? So we were expecting market to come down and take out this low and come down. Now they're all scared. They could either voluntarily exit out before the market arrives there, or they will let the stops run, and any kind of, the bears voluntarily exiting and the stops running, that even fuels more, and you get a breakout, bull breakout. Look at here. A similar one might be happening here. Market made, it's been low, it's been bearish, pull back. They made a new low, but it's no follow through. They're trapped here. Stops, duped bulls. Now the bears failed. They got kicked out. It went up. We now took that one out. We could be getting another trap here and go high. So that's what I'm waiting for. Will it set up? If it sets up, I'm going to buy it. If it doesn't, and we take out the bar 8 low, that means bear, pull back, another bear leg. I'm not going to touch it until I see this similar thing is setting up before I go long. But this is now wedge, higher low. Bulls might be seeing a reversal back up, and they want to break this resistance and get back up to here. They have to show me this. We're still in the swing, second entry sell from this resistance, and we have the trading range lows. Market is trying to target and still turn this into a bear flag, maybe 1, 2, 3, or double top above the EMA. Bear flags can fail, but if it doesn't, that means we take out this low with a strong bear bar, okay? And we could continue to sell, and this would be my target right there. So for 1, you got a gap bar, gapped below the EMA, and a follow-through bar 8. First pullback, they will sell. They're still selling. This is a bear flag on its own, but there's also bulls were buying. Now they're upset. As market comes down here, they will try to buy. There's a gap here. The first place they're going to look to buy, these bulls stuck up there, is this gap area. Okay, so we already tested. If there are any bulls wanting to reverse the market, this is where they might be able to trap the bears. There's a gap here. If the bears close this gap, then I'm going to look for this bear flag to actually become validated. This gap right here is from the high of 74 or the open, close of 74 or the open of 75 all the way to 78 body open or 76, one of these. This is a gap. You see how is bulls are buying? You're stuck up here. You buy down here. Where's your break even now? Right there. Right? So they're trying to get back to the break even. So this is what I watch to see who's going to fail or who's going to get follow through. So I'm watching this gap. If the bears close this gap, they will start to get excited about these lows and taking out these lows. But we already have a higher low, and the market is trying to get back into this weakened resistance. And because bears got a really nice 20-point swing there, but failure to follow, okay, we could get right back up here. Now, there is a leg 1 pullback, leg 2 pullback. This is a leg 3. I don't know. I prefer a little bit more down, maybe come down here, make a new low, breach the 8 low, and give us a third leg down, and then still keep this gap somehow open before reversing back up. So I think the bears still see an opportunity to sell here and close this bar bearish. So I'm not buying anything. If you're bearish, you're still selling. You're hoping the bears will close this gap altogether. Then you can still stay in your short. Probably some buyers here or lower. But at this point, if this gap closes, you don't have to exit out. It could still extend all the way down here. But we start to fail, leg 1 pullback, leg 2 pullback, leg 3, because look at this bar 10. It took out the prior bar's low. So technically, this was a pullback, and now this is a second leg. Okay? But if we start to close bull bars, that means there's a trap there. Bears got trapped, and the market could go higher. What do you mean by trap? Bears are trapped. They were selling. Look what happened. They got trapped. They sold at the high, right? And then came back down, but they're not able to close a bear bar. Those bears exited out probably. 10 didn't close bullish. Other bears are now selling the close of a bear qualifying bear bar. They're still trying to get a break even. You're a bear, you sold the close. Maybe you sold the close or the high, whatever. Sold the close of bull bar. see they got a break even, but they want to bring market down to the 8 close. This is the second time they're trying. Quick thinking bears will sell with a limit order at the highs. Other bears will always look for a bear body. Bar 10 is a bear body close, so they're selling the close of it. They're still trying to bring market down to the 8 close, because if they do that, their original contract will make money there. But getting down there and closing a bear bar will fuel more bears wanting to sell into these lows. So this is what I'm watching right now. If the bears actually can close a really strong bear bar here, this is going to keep selling and try to get below the bar 8 and make the third leg down. See, that's it. They're trying to take out the 10 low and the 8 low. That'll be the third leg. That's already in the third leg. So, limit bears sold. They're looking for follow through. There could be more sellers underneath bar 10 waiting with sell stops because it's double top neckline, bear flag. There's also wedge top or double top. This is a bear flag right here. So they're trying to close a bear bar. Those bears now made money. You see what they just did? As soon as it comes down and tests the 8 close, it just bounces. But the goal is to close a bear bar and continue. I think the market is still trying to sell and take out this low and get a bigger wedge. So that tells me we're still in a swing. But now I want to see bears actually close this gap, and this is their second time. First time, pull back. They're in their second time trying to close. If that fails, then I might be interested in buying with a really good bull bar, trapping the bears, failing to close the gap. I am not ready to buy. For one thing, I'm making money selling. And we got an opening range. Bears, I take the whole thing. That is their target, 53. So bears still got a measured move target from the opening range, 1-to-1 target right there, and they're trying to take out the 8 low now with a bear body. Get a follow through for the third leg, and then get the target is 42.53. Take out the 8 low now with a bear body. Get a follow through for the third leg, and then get the target is 42.53. So there's a little bit more room to downside. Fed members are speaking and algos are listening. There's volatility in the market, and you can see it follows through into this target now. It's trying at least. And that is the third leg now. Leg 1, pullback, leg 2, pullback, leg 3. Eventually we will get back up to the bar 9 high or bar 10 high. But first, bears need to come down and test. There's still a little bit of gap, but if you actually align the bar 11 low with the 17.4, that gap is kind of closed, right? If gap was from here, the gap's closed. Not officially closed, but it is closed. Why is it not officially closed? I prefer a body overlapping with the bull gap bar 75, not the wick, but they are trying to close it anyway. So target is still 42.53, but better if the bears actually close a bear bar here. That gap is not officially closed. So some bulls are seeing, okay, there's a wedge here, let's buy. Let's buy and get back up to here. I wouldn't buy it. I think there's room to downside still. unless we get a strong bull bar inside bar closing on its side, is they can buy the close, but I don't know the future, so I'm expecting follow through into the measured move target still. But if they do close a bull bar, then I might actually exit out, but I'm not so sure yet. It makes me nervous because of this gap still unofficially closed, but it's not really closed. Bears still want to get another bear bar, but the bulls want to keep this open a little bit and close a bull bar on its side. You don't want to see a bull bar with an upper wick. The only time the bears will exit out is if they see a strong bull bar with almost visibly no upper wick, or just a one tick or something. Otherwise, they're just going to sell. A sell. So if you're still short, you should still be in your short trade. Target is 42, 50, 55, 75 to 53 area. I'm going to scalp the 55, 75 if I can get my hands on, and I'm going to have a runner into measured move target. Excellent, so I got it. Now I have one contract left. I'm still looking for bears to deliver. As you can see, we just literally tested 55, 75. Should go below that. Okay, it just went below, so everybody else is taking profit there, but it should go lower. So I'm expecting more bears to move this down. So I'm still holding a runner. I'm looking for 42, 53, maybe even acceleration due to ATR being very, very strong. When does ATR become strong? That means there's volatility in the market. How do I determine that? And I expect overshoots and follow-throughs with bear bars or bull bars. What is that number? What is the average bar size if you're not using ATR? What is the point-wise? No, not percentage, point-wise. What am I looking for? Yes, Toomey, Andrew, Cool Moose, Frank, Market Update Dude, they all got it right. Anytime it's more than 5 points, right? That means, what's the significance of 5 points? Why is it not 4, or 3, or 5, or 6? What gives me the idea that if ATR is 5, I should be able to get a 10-point swing scalp super fast in 2 bars. Not even, I might even get it in a 1 bar. Well, minimal scalp is 3 to 4 points, right? So anytime market is printing bodies that are 5 points long, that's telling you we're gonna swing this, but it's kind of scalp, but it's a swing scalp. So expect a 10-point test right away. So what is happening here that suddenly we're getting this nonsense? You can see buyers both underneath bar 9 is moved up, is closed the bar. So they will buy about 4 or 5 points below. Okay, that's a 6. With a board here, maybe 7. So just an average. Okay, 4 or 5 points. It kind of exceeded that. They're buying, and they're trying to get back up. You see something like this, what are you going to do? I start to see a bar taking out the prior bars open, and it's a strong bear close bar anyway, is I exit out. Or if I don't want to exit out, and I still think the market is going to come down here, but the breakouts are really bad, look at the bear bar. Look at the follow-through. Horrible. Look at the bear bar. Yeah, that's a follow-through, but what's up with this? Sideways bear flag, but look at the breakout. Breakout is weak, and the follow-through is getting rejected. So what am I going to do? I can do two things. As soon as I see that open is being threatened by a bull bar is going above it, I can either exit or reverse and go long, make the money back with that runner that failed to get down here, or is I can look for minimum 2 bear bars closing on their lows or midpoints, and I put a sell order right there above bar 12, and I expect for market to come down here, break even with that contract, because I now have 2 contracts. I can look for a break even. If I'm getting a good break even, I can hold the last contract to bring the market back down to here. But if I'm not getting that, I'm minimizing the loss, and I can simply take a break even and exit out. So you can see limit order sellers selling above 12 or the midpoint of bar 11 because it's a really strong close. So you know at the 50%, there are limit order sellers waiting with bar 11. They're selling. So how would you measure? Originally, you might have sold here. You sell at the 50%. That's your break even right there. So everybody wants market to get there. Everybody wants that bar to actually not only test that pink line, also close below it. If the bears manage to close a bar in 1 minute and 8 seconds underneath this level, they're going to hold the other contract expecting lower prices, okay? So that's the approximity of where the limit orders could be, above 12 at the 50%. But this is now still going higher. There's still, where are the other sellers? Maybe upper 1/3. So if there are more sellers, maybe upper 1/3, maybe at the open. Okay, so if I see this bar still going, I might put a sell order there as well. I'm actually scaling in, and I'm desperate. Now this is my new break even. I exit, by the way. I'm not holding this because whatever this is doing right now, it's fueled with news. Today I said we're going to get a lot of weird back and forth strong bars. ATR is now 975 points, 9 points, and wow, it just dropped suddenly. That means somebody's selling there, but I am not. I exited. As soon as I saw this, I exited because bulls see a wedge here, gotten so close to the measured move. Now, there are ton stuck here. No one's going to want to sell this far. They sold here. They got a little bit of pullback. They got very close, but others are still looking for a bear bar. So what now? This is where the bulls are trying to go. They're exploiting, okay, if no close below or at the break even, bulls now exploiting, and this is their target. So I did scalp. I was bearish. I was holding. Now, what's the reason I should have maybe exited? I'm going to clean this up so you can see what I mean. So forget about this. That's measured move. Forget about this, okay? What caused this? 12 and then the 13 immediately buy. Look at the body, one tick above where the 12 closed. It's already hinting you that they're buying. But there's a reason why they bought here. And there's a reason why I quickly exited out once this bar starts to take out the open. Because bar 12 was testing one tick below 14 point. 14.15 is for bears a swing scalp. And another reason is that you got to break out in several legs up. Therefore, this is an evidence zone. It's a buy zone. But it's actually a strong buy zone. Therefore, it's a demand zone. market will probably wants to come down one more time because of this trapped traders. So if anybody sold maybe above or here, maybe a couple of 4 points above this strong bear bar or this bear bar, they're still trying to average it down here. But other bears, they're not even going to touch it. They're going to look for a bear bar. So they may not actually touch this. Machines will sell. They'll do anything. They sell, they scalp, they minimize. But other bears stuck down underneath 11 or 12, didn't take profit with 12 close, and immediately this went up. Made me nervous when I see the bar at a swing scalp zone jumps up like that at the open. That means is anybody who was long maybe buying down here into that profit taking and accelerating. This has accelerated so much. Their buyers one tick above that. No one is selling. So if you measure from here to here or from here, that's a 4 point. Good place to sell, okay? But you see, machines already started to sell, but it's a bull bar. If I'm still short, for some reason, I'm stubborn, and I see this disagreement bar, 13, and I'm still not exiting the market. Market is giving me a chance to reverse and make money. If I'm down here with one contract, I exit out and I buy with 3, I probably already made what I lost, maybe some of it, at least half of it. But now bear machines will look for a 4 point, 5 point, and they will start to sell. That's what they're doing right now. They're averaging down. Say you sold here, you're stuck there. You sold 4 points above 10 high. This is the new break even. Others will join when they see a bear close and then remeasure it. Their break even probably going to be somewhere down here. So when I see a bar like this after 3 push, extreme disagreements with bar 13. That's what Ali Moin Afshari calls it. Disagreement or rejection outside up bar. You're going to have to think of your bear situation. How confident are you selling up here this much up, right? That confidence comes with the size of your account. If your account is large, you can certainly sit and wait for that kind of pullback and sell. Expect market to come down to this break even. But if you're not confident, better to just take the loss, triple it, quadruple it, and then make the money as it goes higher, and then take profit. But you always keep an eye on where will bears going to re-enter the market in hopes of break even. Probably 4 or 5 points above strong bear bars to the left. There's no bear bar, no one's selling. Some bears started to, this is bulls actually taking profit here. They know that there might be some sellers there. They're paying themselves. But others, no one's selling, others still holding. They're looking for follow through into 20 point, right? 20 point, if you measure from down here, is actually at 74.25. See, market is giving you plenty of time to buy and make money as this bar closed strong, even if you were short here. I already made my money. I exited. That was a loser runner. I really wanted that measured move. Maybe I measured the measured move wrong. Maybe it was right from here. Yeah, look, that was the measured move. So no wonder why they reversed it. So I've seen it so many times. I learned not to be stubborn. So that's great. Exit, bought there, couple of contracts, and scalped at the 4 point. Okay, they sold a little bit, but now I still have a runner into the 20 point, and I just scalped the 20 point at 74.25. 74.25. I was one tick underneath 19.75, 19.75. So 74.25, I was at the 74, scalped it, and I'm out. Now, market made 20 points. Bears made 20 points with 3 legs. Bulls made 20 points. Okay, so a spike and channel up. What do you think that the bears are going to do? Maybe now they might be interested in selling into the profit taking. So there are bears who are not stuck here, might be selling into that, okay, because they know they can scalp about 4 or 5 points here. Now is, what was that, 74.25? That's a 20 point. Anybody who actually put a sell order at the 74.25, their break even is now here, and the market actually now finally reached there. So everybody else stuck down here, selling up here, and now looking for market to reach here. I'm not in that, and I don't care. I'm not going to go against this spike and channel, because one thing that I can even say that. Okay, see what's going on here. If I measure this body, 14, it's breakout follow through. Market, see, it reached here. Market wants to go up here. Eventually, it will get there. But there are a lot of bears stuck, so it might actually come here and then reverse back up. So if I'm actually long, I'm looking for targets, and I'm not measuring, 10 points, 20 points, 15 points. I measure the entire body of the breakout follow-through bar, and if I'm still long, that's the high. I look for extensions, extension 1, 2, come very close to it, but I'm going to scalp and hoping the market is going to get there. If it doesn't, and we take out the channel trend line, lower trend line, I will exit. If I haven't exited out, didn't scalp, I will exit there because it can then come down here. Something that I learned from Ali Moinafshari's presentation. But we know that these bears are selling into the profit taking. Other bears are also selling because it's a good area to now bring the market down to where they can actually break even, walk away from this loss. So before I do anything, I'm going to expect market to try to get down here. Okay, so if there's no bear bar closing, that means bulls will buy. Remember what I measured, bar 14, and measured move target is still up there for bulls. But look what just happened here. That is not a good sell signal bar, but a lot of the bulls actually hit close or sold at market and exited out. Hitting close is like selling at market price. They're in a hurry to get out of their longs. So therefore, next bar could test the 50% and then close a bear bar. Then I'm going to remeasure. But right now, this is for anybody who sold at the 20 point, still trying to come down here. So if I see bar 14, that channel low taken out, and if I haven't exited out, which I did, that's where I would exit out, because market could accelerate here and further down, maybe the high of 12. It can still pull back. Okay, so this is the quick thinking limit bears selling at a 20 point. That's their measured move. I'm sorry, break even. Once this bar closes, okay, so you can remeasure maybe one tick underneath. That would become the next break even. So it can actually accelerate into here, which is also the high of bar 12. So I think that's what the market is trying to do, get down to the 12 high. See how bears are making money right here? We're in a trading range. We're in a trading range. Everyone had their right. If they measure this, they're stuck, right? This is what they wanted, 53. And they're dumbfounded with this. So, but they're smart enough to know a bar like this, 13, will get follow through. So they measure, machines measure and know exactly where profit taking is. All right, so there you go. So that one's done, but this bar hasn't closed yet. Where's the market is trying to go? It's trying to come down to the 11 low. That's where originally everyone entered to sell, probably, because there was enough room to get to the 53. Now, if this bar closes like this, other bears will measure from the close of that bar, and they will expect follow through somewhere in here. Well, I don't know. I just have to wait for this bar to close. So right now, if you measure here, or 74.25, that's the extension for anyone sold at the 74.25. This is their target. They're making money. These bears are now making money, but they will make more. Their goal is to either get to the close, get to one tick below, so they're still pushing. But they're probably buyers. 50% is to lower 1/3 of this qualifying bull bar 13. Limit buyers waiting to buy there because they see trading range. Okay, so okay. We're getting down to right there. This is what the market wants. 11 low. Now that's beautiful. Now, this is how I measure with price action. What's the systematic target? Systematic trading. What are the machines seeing? What's the next swing target? Where would they push this bar? What's their target? Where would they want to take profit? We just came so very close to it. Yeah, 20 point, but where's that? Yes, 55.25. As early as 56.25, they can start to take profit, but these guys didn't really take profit. Is a good, decent profit at the 14-15 points, so they're exceeding. This might still continue into 56.25 to 55.25. ATR is so large. Look at this. One time the ATR is already a 10-point swing. So the 2 times the ATR is your minimum swing at this point. So the market is making minimum 20-point swings like it's a kid walking in a candy store with an open tab. I mean, it's just so easy. So you should shoot for 20 points. I thought I answered this question. It's resistance. It's a trading range high. We're not there yet. We haven't really tested the 19 point yet. And market still hasn't really tested one tick underneath 11. But good effort. Now, what are they going to do? I mean, this is ridiculous. You're not going to measure this. But if you're looking for accuracy, I guess you could do that. But you see, they already got the break even. Look at that. That's the break even if you measure from there. It's so accurate. It's bouncing. Why is it bouncing? It's the lower 1/3 of is this bar right there, right? So we're testing lower 1/3. Some buyers are there, limit buyers, but it's nobody wants to sell into the support. So it might be just bouncing, still wanting to come down to the 19 and 20 point bear, which is 56.25 to 55.25. But it's trading range. Lower 1/3, 15 point is, we overshot the 15 point with bar 16 and didn't take profit. Some bears are taking profit because they know lower 1/3, they're buyers, limit buyers waiting. But those bears also want their 20 point. So it could, if nobody wants to sell into a support, it could be better to sell the pullback. Where would you put? Now you're disappointed. What happened to your follow through? Well, bar 17 shouldn't be happening, right? Is you were looking for a follow through because ATR is so big, we should get down here. But now this is happening. What are you going to do? Are you going to panic? No. you're going to put maybe around 50% pullback or 33% pullback. You're going to put a limit order and you're going to sell and you're going to break even just in case this accelerates and never touches that 20 point. You can break even, but if they start to come down and close, you can jump back in again. If there's enough space there to scalp, right? So that's what I would do. I know there are limit bears waiting. So if I actually measure, if I'm looking for accuracy, that's it. That's 33% pullback. Lower 1/3, limit order bears waiting. I'm going to sell there. It comes down, I already got a break even. But I can also put a sell order right there if this starts to accelerate instead of coming down to my original target area. But chances are it's going to come down from 33% because everybody else sold. So you can either hold or prepare to sell again right here, another contract, or maybe here, because as it goes up, they're going to sell. They're going to get their break even before we go higher. So right now, everybody's selling at the 33%, still making money, breaking even right now. They're hoping for acceleration down and get to the original target they were supposed to be scalping, which is 20 point. Did it make sense now why that red box is important? 09 is okay. So market is down, right? When you have market cycle, L's market cycle, when you have bearish move, market is going to go sideways. You can still make new lows, but eventually it's going to go up. It's going to come down. We're in a trading range. So I find my trading range highs, and I expect market to reverse from there, especially is from this high. There are sellers waiting, right? So if you're not sure, I would go back to the course and watch the course. Okay, so that's going to help you find these levels. So this is also possible bear flag, that the bears want to take out this low, because on the daily we are bearish. So I said we need a pullback. I hope that we could get up to here, but nope. So this is the second, third, or first, second. Now you have a wedge top, lower high, double top, lower high. So bears seem to want this bear flag to break out. So, but in that fashion, we're sideways in a trading range. So it's kind of, it's trading range, it's kind of limit order, but it's really stop order. Bears are making money, stop order, bulls are making money. Pullbacks are deep because the volatility we have this morning. So I'm making money with both the limit orders and stop orders. So it's a really, I love it when market is able to, it looks like in a limit order market, which is a trading range. That's what we are in now. This is a trading range low. This is a trading range high. Market is still able to make money with stop orders as well. So we must be in a trading range, right? So, but now, what happened? We tried the second time. We still haven't really tested one tick below bar 11 low. So everybody who sold here second time got a break even, still made money, but they want market to come down here. I would just wait a little bit because this is going to get the 20 point. And limit order, trading range, bull flag failed, right? So second entry bulls failed. You can watch hold on. Let me. You can start watching. If you don't have the course, get the course. If you have the course, start with market cycle, okay? Trading ranges, okay? 18A, B, C, D, E, F, okay? Then move to this right here, trading the channels, trading ranges right here, and then move to trading range day. Where is that? Sorry, that's not it. Where is managing losses? Limit order markets, maybe not, yeah, in here, but I combined all of this and put together, including the encyclopedia, and then go back to encyclopedia if you want to do this piecemeal. Go to encyclopedia and go to trading range day. It's loading right now, so just give it a second. And go through all of these presentations. Okay, so trading range day. Or you can simply go to the blog or the website and search using Brooks Encyclopedia Chart Patterns. Click on that. Scroll all the way down. Watch this presentation. I put every single one of them, those, not every chart obviously, but I took all of the talking points and I put in there for you guys, including the encyclopedia. Learn about how to trade them, learn about what you should be looking for. This is going to help you a lot. Okay, so that's there. All right, so I'm waiting for, sorry. While I was waiting, bar 18 actually tagged the 20-point swing. Why didn't I get filled though? Because I did sell this. Oh, because I was waiting right at the 20, which is 55.25, and that did not get tagged. So I'm going to wait for market to deliver my target here. So I'm waiting for bears to actually deliver it and test the 55.25. I mean, I even go back to that presentation myself if I need a little refresher. Not that I'm so proud of it. That's not the case at all. It's just that I don't have to go from one section to another one. I'm like, what did Al say here that ties into the encyclopedia so well? So I can actually go look for the right chart. That's how I get around. And I'm sure it will be, you'll take out some talking points from that will help you eventually. Matouche, that is not an indicator. I'm actually using NinjaTrader's risk reward. See that? That's just a tool within there. And then I'm using also Fibonacci level, Fibonacci retracement. Then I set it up that could give me, this is the trading range that's 1-to-1 to the downside, or 1-to-1 to the upside, or 2-to-1. So I just edit the levels. Sorry, line. Where is that? Oh no, I clicked on the wrong one. Let me do that again. Yeah, the levels right there. So a bunch of levels are here. I activate and deactivate some, and then I save it as a template. Okay, one of these, and I use it. So all right, so I exit it. I was waiting for 55.25, but you know what? It didn't happen. So I just put it right there, 18 low. It came down and tested 18 low. So I'm out. I mean, it can still come down, but I'm not gonna push my luck here. Okay, so I'm out because they should have already tested that 55.25. But this is very successful. Still is nearly 20 points. Now, if the bull bar closes here, bulls are looking for 65 to 65.50 test. Now, bulls are looking for a second entry long. First entry, second entry above 18 is also bar 18. Market is trying to reverse. They need a bull bar here. If they do close a bull bar, that's the second entry long from the lows. But if they don't, I'm not going to enter. They already did, so they're probably scalping. If you entered, you would be entered into long position 61.25. It needs to go minimum 1 point. So that means 5 ticks, 1 point an extra tick to cover your exit order. So then 61.25, 62.50 is the target. Not only they're moving above, they now want at least 2 points. So the 2 point is 62.20. Yeah, 62.25. So it has to go to 62.50. It already did. It even went to 63.25. So that's a 3-point scalp. That might actually get another point. So that means these bulls are really pushing towards the 10 point, 65.75 area. I didn't do anything here. I didn't buy above 18. But that is the buy signal. It's a doji bar 18, right? This was not a good entry. This isn't the kind of doji you're looking to enter 1 tick above. If you do, that's because there's some kind of a wedge there. But it's a really strong bear bar. It could have come down. Now, I don't know what caused this, but this is the first entry, so you can buy that close. But because this is the first entry, probably sellers waiting somewhere there. They're going to fade it. Better to enter with a second entry long. Now, there are 3 bars, which is good for the bulls. Last one actually closed even better. So there were buyers above it. They're looking for follow-through. So they're looking for a swing from this level that could last minimum 10 points. I am not sure if they're going to be able to get it, but there's 3 bars. The only problem with the 3 bars, 18 is lower than the 17. So then officially this is your third bar, 21. I'm sorry, bar 20. So if bar 20 actually closes bullish, then you should expect market reaching and testing 65.75, which is 10 points. You know, I'm going to buy. It didn't even film me. Ugh. But there's all right, I just made money. I hit buy market, literally. So that's it. 65.75 is target. That's 10 point. That's it. We just got it. So I made money right there. 65.75. See how accurate it is? Now it's stalling there because that's a 10 point, so they're paying themselves, but it could continue to go higher. Because this is a swing and the bulls want at least 10 point, if not double the size of ATR, so that's 1450. So yeah, 1450, we could actually end up going right there. Because some machines will look at the ATR and always go for a swing 2 times the ATR value if they're already making money at the 10 points. I took profit, so I have to give a little bit of room to bulls taking profit there. That results in an upper wick coming down. But if the bulls actually close that body 1 tick above bar 19 high, they will calculate the ATR value from the last swing, and they will try to get that 714, 2 times a quarter, it's 1450. So this is where they want to go back. It's also trading range day. What is the most important price point when you are trading the trading range days? What is the most important? What is market attracted to price-wise? Open of the day, yes, thank you. So, and you can see we have been oscillating around open of the day. When we are open of the day, below the open of the day, we're slightly always in short. This is how I look at it. When we are above open of the day with consecutive bull bars, then we become always in long. Look what happened here is we're always in long, right? So 2 consecutive bars, but no follow through because this was a strong resistance. It was a TR trading range highs. Now we moved with consecutive bear bars, that is always in shorts, I'm expecting at least leg or two to downside, maybe the test of a support. Then we have no breakout, no bull closes above open of the day, market sells right there, right? So that's the second leg. Now bulls are trying to get above the open of the day. If we do, especially with 2 consecutive bars, I'm going to target the trading range highs once again for bulls. But right now I took profit. I can jump back, and if this bar closes like that, I can buy the close, and I can scalp here and leave a runner and go test the double bottom neckline, bar 15 high. I think the market wants to test the bar 15 high, but first they need to close a bull bar here. They need to close a strong bull bar with preferably very small upper wick. Okay, this is decent, even though upper wick, lower wick, but look at the size of the body. So that means, okay, ATR came down significantly. I don't know. I'm not so sure. That's 16, 12. I'm going to hold it. It could still, it's going higher, but it's 16. I'm sorry, 12. So they already reached that target. Not necessarily. It's just a 1 tick short. They're trying to reach there. Okay. I think the open of the day is target still. But you see how I recalculate it right away? And that's now a little bit higher. Just about 13. They kind of reached it. So are we going to get bulls? This is really nice. I said, look, if you get 3 bars, consecutive bars, and the bars are actually getting bigger, that's right there is bullish pressures. Market is saying, just buy the closes. Buy above bars, buy the closes, all the way to open of the day. You can scalp open of the day, and if you see a bar actually closes above it, you also need to measure. You can't be greedy. You know, these machines calculate like crazy. They calculate before you actually think of calculating. So they know this is a profit taken 14, 15, and we just tested that. Okay, here's 15. So they're probably going to take profit, and this is going to come down a tad little bit. So you have to counter that in, and this bar may actually fail to close above open of the day. But I think this is pretty strong. There are some sellers here, but who's going to sell against this? Not me. So because we could accelerate, the target is probably 15 high. It's neckline, double bottom neckline. Probably buy stop orders even above 15 waiting. They're taking profit as expected. So you can see that I'm dancing my way around these levels, left and right. And even though in a day like this, I mean, look at this mess right here since we opened, but there's something going on here. So what do you see? It's still a bear flag, believe it or not. And there's a wedge here, right? So down, up, down, maybe down and up, and then down, up again. So this could suddenly start to sell. Market is still bullish because this is a key level and we're above it. We're closing. I know they're trying to still get up here. They could, but suddenly we start to see bears and we start to close bear bars on the Globex chart and take out this area with a bear bar, market will sell. So I don't trust these bulls just yet. It's nice. They're trying to squeeze out the bears out of the markets, okay? They're trying to squeeze them out. And this could be very well a short squeeze. Only is if we can actually start to accelerate. So I'm watching this open of the day. Tested but did not close above it. Let me get this out of the way. You can still see the levels. This is kind of a squeeze, but is unfortunately right? So we have good higher lows, double bottom, possible bull flag, but we need to start closing above open of the day. They trapped the bulls up here, came back down. One thing that's going for bulls is that they're not allowing these lows to be tested. So this is still a short squeeze unless we start to see bear bars. Okay, so this is still a bear flag in a way, or the bulls see a bull flag right there. So if we get another bull bar, then I'll be excited about it, maybe test of these highs, but I'm still watching, right? So I'm taking profit because you're in a trading range, you're in kind of a limit order market, and both the bulls and both the limit order and the stop order market traders making money. I still have to be cautious here because we are not yet squeezing out any bears out of this trading range yet. Anyone who was long and got stuck there, they bought at the low. 80% of the time, market comes to the 50% of this trading range. So 80% chance, and then 60% chance we go test the highs. This is where I look for squeeze to start. And then is if we actually take out this high, so we go like this, EMA comes in, I buy the first pullback, and I look for a breakout. Market is trying to squeeze the bears out of the market. So bulls see a double bottom higher low. They want to test the highs. I'm no longer interested in selling anything. So this is obviously bullish. You should have gone long with bar 20. It was the official third bull bar since bar 18 took out the 17 low and trapped the bears, and no more selling. Bears try to sell once, bears try to sell twice, fail. Now we're at the 15 high. So who held all the way to 15 high and are now actually scalping and making money right here? It is also the 20 point. If you measure from the low, right around here, 18, you'll notice that we're at a 20 point swing here. So you should be paying yourself right here. Like I should be seeing like hands up in the air. You know, everybody should be saying, me, I made money. I did say 15 high, we're going to go open of the day. We only have a 1 bar. It's still leg in a trading range, but it's really decent. I think some sellers are up here because evidence says leg 1, really bad. Leg 2, also bad. Only 2 consecutive bars, no 3. Leg 3, also 2 consecutive bars. So this right here is a very tired zone bulls want to breach and break out, possibly test the 50% pullback. So, but you should always pay yourself. You're in a still trading range, and there will always be sellers up here or further up high. Okay, so really strong bar. Now, I want you to be careful about this bar 22. For one, you're at the high of a trading range. For two, this is a gap up, okay, from the EMA. At bars like this is at the high of a trading range, is a gift bar, is a signal to take profit, not add to it. Because these bars are designed to trap the traders buying the close of it at the high of a trading range, and it could come down. It probably wants to go up a little bit more, but I see a bar like this, and I measure and it adds up to be a 20-point zone. I'm taking profit. That's funny. And you can still hold it and expect follow through, but it will eventually pull back. Big bar, big risk at the high. Okay, so it's getting a follow through, but that's because there's a little bit of room here I would have taken my profit there. It wants to pull back eventually, give us a better entry. It's a gift, right? Al Burks talks about this gift. Brad always talks about it, right? Technically, you have 3 legs here. Strong bar at the high of a trading range. Better to pay yourself. I mean, you could still continue to go higher, but you don't know, because this is a trading range day now. Speaking of trading range day, where is that encyclopedia? Here we go. Let's see. See, I warned you about that pullback. Hopefully you paid some attention. Hopefully you paid some attention. Because that's insane pullback. That's quite a lot. So here's a trading range day. Expect strong legs to reverse. When it says strong legs, that's what I mean. Bulls and the bears were able to make 20-point minimum, right? I mean 10-point minimum and 20-point maximum. So you can see here is gap up, double top. Well, we have a double top here also. And then gaps down, gets another leg. This one's a little weird, but very similar. Now we're getting this leg, you can see, and there's sellers there at the high of a trading range. The squeeze didn't really start. You could see we need to pull back to EMA. There might be some buyers at the EMA. So it's basically this we're getting. This one ended up closing as a triangle, which is a trading range. Here's double top, comes down, is double top, next leg down, failed leg, and then they go right back up. We already reached a high. Now, some bears want to continue selling, but look how many bull bars. It's a tight bull channel. It will want to get a second leg down, but very difficult to sell against 1, 2, 3, 4, 5, 6 bar, 6 bull bars and 7 bars tight trading range. So I don't sell this bar. Some already sold and disappointed. Now they will sell at the high again. These bears are disappointed. They're probably gonna try to sell at the highs. And they're doing that right now. You can see. So if you are a bear and you say you were selling, disappointed, maybe you sell at the upper 1/3. Yeah, I like to measure that one first, but let me show you how I do that. So you don't have to do this very quickly. You can have it all actually built in the same Fibonacci level, so you don't have to do this in twice like I'm doing, right? So first I find the areas where I can put a sell order. 66% is one. So then I go back, and if I sell the 66%, my break even is right down here. The market did not really pull yet. This is the break even. So those bears need to sell, and they're desperately hoping the market comes down here. They're selling, you can see. This right here is the 66%. Or if they actually they sold the close, you can see this body, then this is their break even. So watch that body briefly come down, or the next bar. See if they be able to get their break even and exit out before this actually tries to break out. So this is inexperienced traders selling against this, is get stuck in this really strong, right, kind of a trend, goes sideways and may want to continue. Now this is a pullback, nobody wants to be in it, obviously. And I said, this is a gift bar, those machines will take profit, and they did. I proved my point with bar 23 is exactly what it did. But if you're inexperienced and you sell this bar, you're stuck in this bar. And now you're desperate, you're wondering, wait a minute, why did I sell this? I may not get a break even, this is still struggling, and this could suddenly break out and leave me behind. That bar eventually came down here, not necessarily tagged the break even. So you see how you really have to study these kind of days and when not to sell this bar. This is a profit-taking bar by bulls. When a profit-taking bar does not sell with a second bar, that means not many bulls are trapped here. And they not only see this as a gift, but they're also trapping other sellers and now looking for higher prices. But there's still bears stuck here. And now instead, they're going to 66%. So you can now say, hey, I sold a trading range bar. Bars are overlapping. Bar 24 close. And this is still my break even. So you are still waiting to tag that area. And the bears will still try to do that. But this is where I learned to watch, not be stuck in this trade. If market is giving me a gift, it's signaling me to take profit. My job is to measure how long is this leg? Is this an area where the machines are getting ready to take profit? I need to take profit with them. Or I could do this. I could take profit and I could sell and look for a 2 point, 4 point, maybe 10 point. I mean, ATR is 6. So look, if you actually sold, now bears did not make a 10 point, but they did close below 6 point. Now they're still trying to sell, but I wouldn't sell into 10. They might very well get down there with a second leg, but first they need to close below the break-even point. Come down and test the bar 23 close, and then their 10 point for bears. Profit taking can begin at 9 to 10 points, so 1 point above 10. So market still can tank all the way down here. This is the second leg for bears, but this is also high 1. This is high 1, high 2, possibly high 3, but these bears need a second leg. So if they now, look, they got the break even. Now the goal is to close that bar right there, 23 close. And they breach that, this is where they're going to try to accelerate, because technically the second leg can add up to a 10 point. Market conditions are okay to give the bears that. So you have to always expect that second leg reaching 9 or 10 point and give these bears a reward. If the second try fails to close below 6 point, and the next bar opens up by buying the close of a bear bar and goes back up, then there is no bear trend. Bull trend resumes to the 30 point, 40 point zone above. Okay? Watch now. These bears are trying to close below the 6 point. If they manage to do so, they will go for a 10 point run. They're like, we're not leaving this on the table, but we do have to need the second try. This is basically rally, first pullback, is first sell. Immediately, bulls faded that, so bears are trying to get a second sell here. Failure of second sell, squeeze begins, and we can squeeze out the short so fast. I like to be in that long. So I'm watching now. This is it. This is do or die for bears. Before that squeeze starts, they're trying to make money, but they have to close that bear body underneath 6 point. Failure to do so, bulls will swarm the market. When you figure out what the machines are doing, or they like slightly show you, if you look at, let me put my thoughts together in a better, more sophisticated way. Let me restructure the sentence. If you look at a chart, one market, it's like you're having a relationship with that market, right? So with that price action. It generally repeats the same thing over and over again. And it leaves hints, okay, so clues on the chart that could be signaling what the machines are exactly doing. Once you really see that, there's no unseeing that ever again. You know it. You're in the know. And being in the know is the only way to trade these markets, especially S&P. It's the biggest market of all, right? So most liquid is everybody wants to trade. But it all starts with understanding how the big players, meaning machines are owned by the hedge funds that they can pour millions of dollars programming them. And those machines who are programmed by the people, hedge fund owners, used to be floor traders at CME once. And they knew exactly how S&P moved. So they would signal their clients, whatever, brokers, they knew. Nobody goes to work not knowing what they're going to do that day. You go to work, you're winging it. I mean, eventually your boss will figure out that you know nothing. You know nothing, Jon Snow. You're out, right? You'll be fired. So CME is no different. Market's not no different. When somebody says, nobody knows what will happen. Oh, no, we know. When you study Al Brooks' methods, Al is making it very easy because he already knows how these machines work. So just study and then look at the charts. You stare at the charts and the bars long enough and start measuring like the way I'm measuring. You're going to see what's up. Okay, so once you see that, you're in the know. And you always will look for that. And there's always a trade open in the right direction. And you'll always be in the green. So once I figured that out with the help of someone who I paid way before my Al Brooks knowledge, and then I found Al. I'm like, oh, okay, Al's totally making sense to me. I'm going to study. And my old job, I actually started to switching to more of Al's methods. And that's how I ended up here. But it's just that because Al figured it out, and I saw earlier on what the machines were trying to do. So that's all I do. That's all I trade with. And that's gave me consistency. Once you figure out those machines and how they're trading, you're going to keep measuring, and you're never going to be trading with uncertainty. Well, I don't ever remember him mentioning Al, but everything I do is pretty much after what I read in Al's courses and now reading books. Very similar, but obviously he only showed me tip of the iceberg. And, they have systems that they don't share. But what he was showing me is that learn what some of the algos do. You obviously cannot know everything. I mean, there are algos, there are computers only scalp a 1 tick or 2 tick. Okay, so you don't know. So you pick something that works and you just trade with that. Yeah, that's exactly what you do. You reverse engineer the chart. You figure it out. So once I learned that, I saw that, support and resistance, it didn't really hold any significance to me in my trading anymore. Yeah, it's good. Support, resistance, everybody knows you should buy at support and sell at resistance. But in between, there's a lot going on. You could buy here, and then this happens, you give everything back, you might even be losing. What happens up here is what you should be knowing ahead of time before it happens. So when this comes down here, you're like, okay, I'm totally screwed here. What am I going to do? I wasn't expecting this bar 16. So you learn what the machines will do ahead of time and you do it with them. Anyways, so bulls are still trying to push this higher. But there's an inside bar, you guys. OII, now another outside. Now you have OIO. So it's a breakout mode. And you can see bears already exited. I no longer need this. Look what happened. We didn't close below the 6 point. So if the second leg fails right here, bulls will resume their trend into, that was 20 points, somewhere around 25 to 26. I'm going to mark 26. They're going to try to get to 25 to 26 point, possibly 30 point above. So high 1, high 2. 26 is high 2, but tight trading range is not all that exciting. So I would probably put a buy stop order above and wait to get a breakout to sweep me into the trade. So that's what I would do. Because if there are no buyers here, tight trading range, they want to come back down here again, my stop order above 26 will be safe. But if the bulls are ready to break out, they'll activate my order anyway. So this is still at the highs, inside. Bulls test the outside bars 23 high. Kind of got trapped there. Now if we get a bear bar and you put a buy stop order above 26 and you didn't get filled, you're safe. You can always exit because this bear bar closing on its low will make the market come down and test the 25 low and get a breakout from there, and you can jump in on that. But yeah, now they're closing. Okay, so if the bears now close that bar, that means we're coming down to 10 point or 9. Let's see if they can make it. But that bar hasn't closed yet, so it has to close. Wick doesn't matter. Now, if they fail and everybody's selling, it could get trapped there one more time, right? So machines, they're going to look at this bar. Oh, that's great. We just tested it. Since this is the first time we're testing the low of 25 outside bar, that's a trap zone. Bulls are waiting to trap the bear, selling the bar while it's moving down rather than waiting for its close. Now, if they push the bar, close it somewhere up here, more bulls will come in. Those bulls who actually have their buy stop orders, they will probably going to lower the buy stop above that bar. I personally don't like the buy above strong bear bars. That wouldn't be my preferred high 2 setup. But second time market is trying to sell fails, there will be bulls waiting above bar 20. What is that? Bar 20. This thing is covering 27 high. Oh, sorry, that's yeah, let me open the question box. Now the question box is open on webinar. So the whole day could be a trading range day today. We really need a bear bar here if bears want to sell. Otherwise, we could just squeeze out these bears. It could start. But if we start to get strong bear bars, that's technically a second entry short, but we need a bar closing below its midpoint. We're still waiting above bar 28 high. If you're trading the weekly chart, we're already bearish, right? So Market, this is the second leg down, and this is a strong bear week closed, so that's a sell signal for the last week. Even the last week is a follow through, so is breakout, bear bar, follow through, and bears are still selling. We're at a critical area here, but we could actually sell more and get into this area, maybe the test right at the edge of this yellow box, although I'm not so sure if I actually did a good job there finding the range. I think I did, so it could be even okay. So you see we're testing now. This day, this week is testing the area. I'm just trying to get these bodies, but I think it would be better if market actually pulls down further. If I see an inside week as an inside bar with a strong bull close, I would no longer sell. But there's another thing. Let me get rid of this. This is a strong leg down. This is a pullback. If you actually measure the pullback, this is the target. This is where bears are trying to reach. And if this week continues to sell, today is Wednesday, so today, tomorrow, and even Friday, we could finally reach this area, which is 41.95. But that's still far away. Something has to be a catalyst for market to keep selling. I'm not so sure. We might need to pull back because we're testing this area. Okay, we might need to pull back before selling back again. So this week is, if it closes a little bit higher, and then the next week we start to pull back, maybe we pull back again, then I would expect the next leg, leg 1 pullback, leg 2 pullback, leg 3, then maybe finally reverse back. That would put us sideways and down again possibly. So I would be careful there. But then again, it's weekly chart. The reason why I look at the weekly chart is to determine how strong the week bearish or bullish. That's all I look for. But really on the daily, I have targets. So looks like we're squeezing out the bulls. We just squeezed. See what happened? Nothing closed. So if you sold this bar, something that you're lacking as information, just a bunch of inside bars. This is a trap zone because the overall market is bullish. Okay, so if you're selling this bar, not knowing how S&P moves, you are selling into a trap. The bulls are about to trap you. So I'm giving you visual clue with that 6 point. There is no bear trend here. So where's market going? Probably 26. Oh, look, they actually reached 30. Okay, that's nice. Now, if we reach 30, we're probably going to reach 40. This is where market is trying to go. And that happens to be my next resistance, also breakout test. I think finally, bulls squeezed out the bears here, and they want a continuation into the 40 point, which is around 94.75. Wait, that's wrong. How much did they move the market here? Okay, 95.75. I was 94.75 is actually 39 points, so that's 40 points. I should have wrong. So they're still pushing this higher. Magnet above. We need a breakout bar. I don't want to see is this a failed breakout right here. I want to see a bull body closing at least up here and a follow through. That's what I want to see. The setups that you guys are looking for requires at least 10-15 minutes. I don't have that kind of time to go over strategies, how to trade. strategies. So the good luck trade, I'd be happy to do so. I just need a little bit more time. I can certainly do this on Friday. I think I'm scheduled on Friday. Oh no, tomorrow. Tomorrow afternoon is a better time. I think I could go over all of that if you want me to. But right now I'm looking for price action questions in here. Those are like the point counting, alley strategies. Those are, they're going to take long time, and I'll be sitting here until 1 o'clock, and I don't want to do that. But tomorrow, in the afternoon, I can actually show examples and go over if you like. That would be enough time. All right. I just want to trade a little bit more. If there are more questions, please post in the on the GoToWebinar. This is not a good breakout. Bulls actually failed there, but we could still continue to push this higher. But I don't like the way that this bar closed. So now, if this bar open, bar 29, if it actually closes bullish and takes out the upper wick with a strong bull body, we're going to get follow through, and probably market is trying to get to here. 50% is also target, which is 90.25. 50% pullback from yesterday. Okay. You can also measure this leg. Since this is a breakout, that's measured move target for bulls, 98.25. It's slightly above the 40 point, which could drift before we come down from there. 60-minute, I mean, I'm reading the bars on the 60-minute, not necessarily this. Obviously, market is trying to get to the EMA on the 60-minute, and then possibly test out the breakout, 42.95 area. We could actually next hour drift a little bit above the EMA. So we're bullish. We just squeezed out the bears and in the process of squeezing them out even more. So market is trying to reach 42.89 or 42.90. Let's see if they can actually accelerate. But breakout is not all that exciting here. Now, bulls need to compensate and close this bar as high as possible to get a follow through. And micro double top like that, that's not a good sign. So they're going to have to undo this micro double top, possible micro double top, because it could still come down here. What they're trying to do is, I said this area is weak. The next breakout could turn this into a support, and that's what's happening. We will come back and retest this area, but only to buy and go higher. So this area is target still. So I'm expecting bulls to follow through and get us to 42.89 to 42.91 area, and then maybe even further up to 95.75. In the upper trend from bar 19 to bar 29, there are several gap bars. How do you decide which one to use for measured move? I mean, I just take the whole leg because it's a continuous buying. Or you can say, if you're conservative, you could just take the breakout. Nice leg is breakout, and we're already at the measured move. No wonder why they are stalling here, but we squeezed out the bears, so now I'm thinking maybe this could be their target. So it happens to be the EMA, 1 hour EMA. So I'm looking for follow through, but this is strong. I'm going to take the whole leg because I have seen Al taking the whole leg, bull bar to bull bar, and excludes that high. because this is the leg. That one right here trapped and started to sell. So if you take this all the way to 22 high, then this would be your follow through measured move. That's how I would take it. Or you can simply do the basic. Okay, so here's my stop. Here's a breakout. Bad follow through, but still it worked. Then here it is, your target, which is right around the 40 point. It all leads into that area. There's a micro double top and a neckline. It's 28.29, but no one's going to sell that. Why would you want to sell this? Right? So we are going higher. So I'm still long. I want to test out 89 at the minimum and possibly testing 42.90. But the one thing, we're testing the magnet. Bulls need to close above the magnet 1 hour EMA to get a follow through. This area is still target. So we're breaking a strong Globex resistance is 42.95. Remember, we found this area together right there. Maybe some early sellers could be here, 92.50, but I think this is where they're trying to reach. Is there a wedge here? Yes. Leg 1, pull back. Leg 2, pull back. Leg 3. Is there a nested wedge? Yes. 1, 2, and 3. Okay. If we fail to close above the 1 hour EMA, we could suddenly get a strong sell signal bar. You got to watch out for that because we got nested wedges going on here. We got 1, 2, 3. You got 1, 2, 3, right? So we don't have a bear bar yet. You can certainly exit out under a strong bear close. Otherwise, hold it. Hold it all the way to the 50%, 90.25, and then hold it some more. Pay yourself there. Hold it some more into here. But you see a strong sell signal bar. That's going to be the first entry short. They're going to fade. Bulls are going to fade that first entry short. So best to wait the second entry. And you may not get that second entry until we test here. So just hold on to your long. Don't exit. So I'm about to scalp 89. I'm 1 tick below. And I'm going to have a hold on 1 contract. And I'm going to look for. So I'm holding. I'm long. I'm holding. I want to see at least 42.89 test. It's probably going to breach into 42.90 before coming down. I don't want to exit here, although it makes me a little nervous because we haven't closed above the 1 hour EMA, but we should. So the first, you can also hold it all the way to 90.25 or 90. I would say 1 tick below, 50% pullback. Pay yourself there instead of 89. I'm a chicken, so I'm in with major contracts. So I want to really scalp here and pay myself and then hold something. So I want to pay a little early when everybody else is trying to scramble at the 50% pullback. So I'm not in the pay line. Here we go. Okay, scalping here, holding 1. I'm holding now. Oh, this is great. We actually went 2 ticks above 89. So we're testing an important area. I'm still holding 1. We closed above the 1 hour EMA. I don't like the way the bar 31 opened. You can see how it opened. They're taking profit here. Because price action wise, it's an important resistance. But I'm not going to sell because there's a pullback buy area above the 31. Now, there are sellers here stuck probably selling higher. They want market to come down to the 2 high. We could pull back to 2 high, but I don't think so. Probably buyers down here at the low of 30 or even as early as at the breakout point 31 high, and they will try to push this higher. But if you're worried and this bar closes really bearish, taking out the breakout, early breakout point. And there's a gap here with the 30, when I say 31, I meant 29, I'm sorry. If the 29 body gap bears manage to close, you can exit below that bar. But you got a really nice leg here. Probably wants to get another leg up. This is still the target. So I'm not going to exit out of my long, but this I did scalp very well. So I'm going to wait for it to correct itself. This is the first sell. Probably we're going to test the high before selling again. Let's see if there are any buyers here. Bears trying to close some gaps. They're trying to come down to the 2 high because anyone sold here might be trying to make some money here, but we have a really nice target up there, and I'm not really interested in selling anything. I don't like the way that this is pulling back, but it's just so minor for me. So I'm going to hold it. But you can exit underneath this bar if you're, because this is now an outside down bar after a wedge top and also nested wedges. So probably it might actually start to get a second leg. If it closes a bear bar, I'm sorry, if it closes the bear bar and gets a second bear bar, not second leg, it could actually come all the way down here to the bar 3 high even. But if they fail to close the bar below its midpoint with a bear body, then this is going to be a pullback, breakout pullback, and then buyers will start to show up again. If the bulls actually manage to close at last minute above the EMA, that's even better, but I'm not so sure if they're going to be able to do that because it's a pretty strong bear body already. So you can exit out if you like, and then buy the next bull bar if the market traps the bears here. Bears trying to swing this down. Okay, they see a nice wedge here. 1 hour EMA, you can use, you don't have to have this indicator. This is an indicator I downloaded from the brookspriceaction.com trade room. I'm sorry. Yeah, exactly. I liked it. There's a download section you can download a bunch of stuff. This was there. You can simply use a 200 EMA. It plots in the same area. Not much of a difference. I don't know what hold on, let me read this question. Thanks. Because I see that there's another question above that I missed. Oh, I missed a lot of questions. Okay. Some bulls will exit below bar 31, but that gap is not closed, and you're selling against something that is strong. I don't like to sell these bars, but I like to see highs to be tested again. Bulls stuck up here, maybe one tick above 30. They're buying the close of 31 and looking for a break even somewhere here. Okay, so that's what's happening. If we get a second bar, bear bar, see, that's not a sell to close, although they tried, but they're buyers underneath that bar buying 31 and wanting to get right back to the 30 high. So this is why I didn't exit out. So I want to see bulls get us back to the 30 high and then to the EM 40 point zone. But if we fail to get to the 30 close or 30 high, and suddenly these bulls actually start to break even, and then we get a huge upper wick and a collapse of the spar. That's leg one. Pull back, we could get a leg two. But we made a new high, so this is a high one now. Okay, so that's high one. And the bulls probably want a high two here. Could this be a wedge with yesterday? Yep, there are a bunch of wedges here. So I think I already answered that without reading the question. Sorry. Yeah. All right. In the meantime, Tumi asked a question and Tamara is asking another question. So I'll just, it's the same question. So I'll just answer it. The way that I measure things, very simply, this is also recorded. You can actually watch these videos. Last month, you can actually watch them. I went over the point counting in detail. So you can watch those videos. I think it was like last week, the week before. But I'll just go over it one more time. So market coming down, right? And maybe it was coming down already like a 15 point or so, right? So it made a 10 point, pulled back, and a 15 point. Then these guys are taking profit somewhere between the 13 to 15. Here, they took profit 9 to 11. This is the zone. This is the zone. Okay, so 14 is in the middle. We start to get a move up. If you start to see a leg up and a strong bull closes, they're scalping. They're scalping from the swing level, maybe 4 points or so. But if they only get a 4 point and then take out that low, then we resume the trend. We go to 19, early profit taking 20, and exceeding 21. This is your new zone. But, however, say we didn't get that break down. We got a 4 point. We come down. We never take out that low. Now we're in the second leg. We got a 5, now 6 point close. We got a bar that closed 1 tick above 6 point. I immediately mark the 10 point right there, and I expect market to get there and take profit. Okay, so this is now new resistance. This is now new support. So you have market coming down, right? So this is resistance. This is support. There will be buyers. If this resistance is strong, this counter trend will not go beyond 6 point. Down counter trend will resume. We're going to get back to the support. Most likely we will break it, and we're going to get to the next swing zone, maybe 10, 15, 20. Okay, so think of these areas as support and resistance. So let's do a quick exercise. I'm still making money here, but I'm keeping my eye on possible second leg can start here. Bears got a first entry short. They want a second entry short and a major trend reversal. Since we're in a trading range day, but failure to get above the EMA and get another bear bar could start a double top neckline and a bear flag down, several bear flags down. But if we start to get a bull bar close above here and to take out the 31 high, we're going to find ourselves right up here. So don't quit your long just yet. Okay, so this is high one, bulls want a high two. Well, let's talk about this real quickly. Hold on, let me get rid of this. Market was selling. Oops, market was selling. All the way down here, that's a 20 point, right? It's between 19 and 21. So profit taking began. We already closed the bull bar after testing the 20 point. That's first sign. Second sign, that's it. So this is where I got my conviction. and I'm looking for a 6 point. That's it right there. The only problem here is that bar 19 closed right at the 6 point, but it's a good close. It's a good bull bar, but it didn't close one tick above. Wick doesn't count and body has to close. But it's still okay. Then I see bulls are buying. Oh, this is great. So what I can do, I can put a buy stop order one tick above bar 19, and I expect follow through. If bulls are not going to be able to get a follow through, okay, they're never going to activate your order anyway. If this is nothing but a 5-6 points bounce from the old supports, okay, that means it's probably going to sell, okay? And if it does sell, that means you're going to get a sell the close of bar 19, and you're going to get a bear body. You can cancel out the sell buy order one tick above 19. But look what happened. They closed a bar. They already reached 10 point. I don't know what the ATR is, but let's take a look. ATR is at that time 575. No, I'm sorry. 7.5. ATR at that time was 7.5. Okay, so we already reached 10. 2 times the ATR is actually what, 7.5? 15. So now I'm going to measure the 15 point. Check this out. That's 14. They reached the 14, quickly came down, but then reached the 15. Now they're actually exceeding 15. This is acceleration. At this point, your stop is down here. You're trailing underneath these bars. You're looking for a 20 point. Hold it. That's nice. 20 point right there. We're not able to get above it. Here's profit taken. They tried, failed. Here's profit taken, more. Bears are trying to get a 6 point here. That's 675. They got a 6 point. You see why they're trying? Why they're not letting go? Because they want a 10 point. So get rid of this, right? They want a 10 point. They started to sell where they knew these bulls were going to take profit. Bar 23 is a profit-taking bar, but some of the bears are selling. They see that the 23 closed very strong. They want continuation. They want continuation into at least 9 point or 10 points. But where's the follow-through? Where's the second sell? Second sell, maybe underneath 25, but that's not a good close. Who's going to sell that? I'm not selling that. No way. Because for one, this is high 1, high 2, but the bear is still selling. I need another bar closing. This is basically leg 1 pullback. Leg 2 bears, leg 1 pullback, leg 2, and then the leg 2 failed, didn't close below 6, and the bulls trapped the bears underneath the outside bar, bunch of inside bars, outside bar 23. And then look what happened. They closed the bar above its midpoint. Nobody's selling already. No one's selling there. So there's no bear trend to expect a 10-point move. This is going to resume into probably 30 points. That's, there it is, 30. Actually, even test with these, 30. And even went up further, closed above, so that means they're probably getting to the 40. 40 is a bull trend, and there's also a measured move, so no wonder why they want follow through. Okay, but the one thing that's happening here that's upsetting the bulls is that we're not able to close above the 1 hour EMA, which is resistance. So if this is first sell, this is the second leg bears, where are they? They're not there. They're still trapping, okay, the bears here, just like they did here. But this could be the final flag. The market could reach, but they need to now close a bull bar above this 1 hour EMA. Once we get that, we're going to get here very quickly. So what do you do here? This is no more. Just cancel it. So you're looking for follow through. You're looking for follow through, and you're buying the previous zones because they're now support, and you're looking for a bull bar at that support and you want to go long. If the bears take out that previous support, which was 30 points, right? So look, bears already took that out, but no follow through selling. So there's nothing there. If we get above that support, we're going to go to the next resistance, which is 40 points. It'll make sense as you start to measure things. You're going to be like, oh, I get it now. I see. It's pulling back to the old swing zone, which they took profit. Chances are it's probably a support unless they break it and give me 6 points. Well, they gave you maybe a 6 points, but that support didn't break. It broke, but it's just no follow through. So now bulls want to take out that bar as high. That's high one. They're trying to get a high two. Higher this bar closes, that is going to be a breakout to the upside. So hopefully that's helpful. I just went over this point counting to me. Hopefully this makes sense. Target 20 point from 27 low. There is no 10 point here, so you cannot measure from here. You should be measuring from the previous pivot level. So the trend resumes. We're always in long. Now, why are we always in long? If you don't measure anything, why are we always in long? What did we just do here? What did I say? This was a resistance, right? But what did I say? There's no consecutive bear bars. There's only two. I need three. There's 3, but they even broke that one after selling. They broke that one. When these supply zones or strong resistance zones are broken by bull bars, okay, that means we're still always in long. Market is pushing. It's violating all the resistance because everybody agrees that higher prices, contracts should be marked up higher prices. So therefore, you see these resistance are broken. They're using that as a support. That's why I turned this into green. Remember I said this is weak. It used to be red. Now we broke. I said expect a pullback and the buyers to show up. Now buyers got one job here, which is to close a bull bar above this 1 hour EMA. If they manage to do that, we will accelerate in here. If they fail, then the bears will sell again because we have a perfect double top. But this bar still has, it's a baby, so there's still 4 minutes, and the bulls can still accelerate and break out, okay? After all, this is the second entry long, bar 34. So, do we care about the 60-minute, 5-minute moving average? Oh yeah, we always care about it. It's an important resistance and support. In this case, it's resistance, but just like here they broke, they're now trying to break it. Bulls want a 40 point plus, which is their measured move target, if you measure from there. So you see how it's accelerating? I'm doing pretty good here with my runner. So let's go. Let's go get that 40 point. Better if they can actually close the bar bullish. There's still 3 minutes. Hopefully it's not going to close on its low. If it does close, suddenly collapses and closes bearish, I will exit out of this long. I will just wrap it up because that means it'll be a failure, impossible trap. It could be also bull flag, breakout, final flag, breakout, failure could come down. Okay, so, but I think let's see, you got spike, pullback, breakout. I would expect the next one before I would do good luck. Good luck, bulls. You ain't going nowhere because this is coming down with a couple of legs. So I'm looking for 3 push wedge top here. So if you're still long, hold it. Only think of exiting if the spark collapses and closes bearish. Then you can exit. But bulls are still pushing. There's not much of a space left here. Maybe like a 5 point, 5.5 point, maybe 6 point to the upside. I don't like the way it's playing out right now, but there's still 1.5 minutes here. Now, if it closes like this, I will exit, but it hasn't closed yet. It's trying to shake out the traders. It could shake me out right now by scaring me. And if I hit close, I may take a small reward here. Only it turns around and goes higher, I'd be very upset. So, but we are testing the 20 EMA from the 1 hour. There's still room to upside. 95, 42, 95 area, or 25. So I'm not going to let these machines shake me out of my trade. Hey, Eric, if you are Eric 5739, can you check your message? All right, that's a good close. That's, but it's a new high, so I'm not sure. You can exit out, but I'm not going to. You know, I can actually fix that Roy rolling. The problem here is that I'm just too lazy because there's a way of doing straight lines. I just need to go. I just need to remind myself not to be lazy. Right. There is also, I mean, I'm paying attention to the breakout test, and I want to see. Obviously, there is the trend line, yes, and in fact, there's leg 1 pullback, leg 2 pullback, leg 3. So this is the target bear's trying to reach. Okay. So you have leg 1 pullback. This is complex. Leg 2 pullbacks and leg 3. We could still go test and then come back down before we go back up here. So watch out. Okay. We have also wedge here, but this could be a little bit difficult to reach at one go. This is the hourly, so I'm looking for this trend line to be tested. But first, market is trying to get to the 95. This area is my target before I even think of selling anything. So a little bit more room to the upside. You guys are too funny. Okay, I'll be a little bit more cleaner when I'm drawing stuff next time. Sorry if I'm confusing you guys, but obviously this is still going higher. We got a nice bull flag. We just need bulls to take out that 35 high. I'm still long. I don't let these guys shake me out of my trade. How are you feeling, Cool Moose, after your ER debacle since last weekend? I hope you're better. I've been wanting to reach out to you, see how you're doing. Oh, good. Poor doggy. All right, let's go bulls. Dogs feel, they feel your pain. They're ashamed. Cats, though, I had this cat in the middle of the night finding places and laying down. The cat knew that I was so clumsy and probably gonna, step on her. And she would warn me in the middle of pitch dark, and I would hear just little squeaky noises that she would make, hey, I'm right here, don't step on me. So she would guide me in the dark. But she would manage to trap me. They have a way of jumping in front of you while you're in a corridor or something, and they trap you and trip you, and they never show any remorse of their actions. They're more like, hey, that's a score right there. 5 points for tripping her. Okay, here we go. Come on, bulls. This is great continuation, but it's the institutional pattern kind of set up. You got probably 1 pullback, 2 pullback. We're in the 3rd leg up, so I would expect follow through. Better if the bulls can actually close a bull bar here. That'll be a follow through, and then we get maybe an overshoot of this trend line and then come down. Now I don't want to see a bear bar here, but just trying to be patient. Target is still 95.75, or you can take profit at 95. I would hold it. I wouldn't take profit at 95.75. Look for 42.99 or 4,300 round number. Somewhere in here, we got targets. So when the price gets here, pay yourself there. If the bulls close 2 consecutive bull bars above this moving average, we're going to keep pushing higher. Oh wow, more questions. Okay. Would you consider buying the close of 20, bar 20, given the parabolic wedge, double bottom, higher low, 20 point take profit, buy bears? When you say 20, you mean bar 20, I assume, or the 20 points. Yeah, I mean, I try to explain there why I would buy. First of all, this was actually a squeeze. We just squeezed out the bears out of this trading range. This is a good pullback. You can buy that pullback, right? So yeah, you can definitely buy it. That's also a major trend reversal I called, if you remember. I said this is a trap, double bottom, higher low, buy the next pullback. It's basically a W pattern, double bottom with a neckline. There are always buyers there, but you want to see there are buyers there. You want to see a pullback to the breakout point, then you buy. So that's pullback to the breakout point, then you buy. So you can buy the close of this bar. You can buy 1 tick above. You can buy if you haven't entered down here or down here. This would be a late entry, but it should get you small 3 push up, another wedge. Okay, wedge top. So that's what we're getting right now. When you set up to R, how to choose bar for measurement? That's a good question. Well, I always measure for 1 R first. Okay, so that's my go-to profit target, such as here. This is the measured move, right? I'll just measure that. That's another target, so I could just get rid of it for a minute. And I'm going to get rid of this, and this is the 33. These are all targets, by the way. The bulls can still keep pushing into this. This is, I'm sorry, 66% pullback. Okay, we're at the 50% pullback. This is measured move, and that is just about 40 points. Okay, get rid of this for a minute. Just too many things. Okay, so big bar, right? If you buy this, that's not going to be all that great. Now, I could start measuring with this. This would be my 1-to-1 target. But there's a bit of a gap here. I guess I could just, maybe take the 50%. I mean, this is where I'm going to scalp. I don't care about this. This is my 1-to-1. But market is not able to close. You get a 1-to-1, right? And then starts to come down. If you get a bull bar closed above 1 hour, next is 1.5 hour. If you see bull bars closing, then you get 2 hour. Obviously, this is going to pull back a little bit, but pullbacks are small. So what happened there is this is a major pullback. But the one thing that's good going for the bulls, it's not taking out the stop. Well, first of all, you buy something like this, risky bar, you're not going to put your stop here. You're probably going to have a white stop. Okay, so how do you measure the white stop? This is how I measure it. Okay, so what am I buying here? There's a range. I measure it. This is where I would try to put my stop. Okay, yes, it's far away, but you're kind of committing to buy something already very risky. And it pulls back on you. If you put your stop here, you're going to be so upset. You're going to be, you know what, I'm going to get out before it hits my stop. You exit out, and then the bulls buy, and they're going for a 2-to-1 target. So if this is 1-to-1, and I'm still measuring from where they broke out, that's my 2-to-1. Now look at that. Look at that. To the tick accuracy, 42.79, right? So they got the 2-to-1. Once they take out these, you can actually put the stop here. You might even trail it, right? So that's what you would do. Or now is you don't see, okay, you see a breakout 22 and a follow through. You can take that stop from here, put it underneath here. Now you have a different way of measuring. You can certainly measure maybe this bar right there, right? And that would be your 2-to-1. Or from there, you would go 1-to-1. Look at that 1-to-1. Now they're still buying. Is you can then either calculate from there 2-to-1. You're still in this. Or is because this pullback is so strong, maybe bulls didn't even really enter here. You can instead measure from here. Here's a leg. Put your stop there. That's your 1-to-1. Look, to the tick accuracy. Tests again for the second time with bar 31 high. Takes profit, but then closes above. So it must be going somewhere. Probably 1.5. Oh, look. To the tick accuracy, 93. Bar 37 actually tested and taken profit. Now, if the bulls actually get a close above this, another bull bar, you know exactly where they're trying to go. That would be 2-to-1 target, which happens to be a little bit above measured move. Maybe 5 points extra. Oh, yeah. Look how it lines up so well. That is the 2-to-1 target. If I measure from here, it's also 45.5 point extra before it comes down. So we know exactly where these machines are seeing. So I see it. So they're still trying to pushing into here, possible 2R target. So I can see where they're going. Therefore, you're not going to exit your long trade. Okay. So it looks like they're trying to go up there. So that's how I roll with the 1-to-1s and 2-to-1s. I do. I mean, in time, you'll get there, Nags. I think, yeah, I know. Are you a he or she? I'm sorry. I think you are a she, right? I might be saying your last name, not first name, but anyway. I think what she's saying that you got a lot of strategies you use. I do, because there's so many different machines look at so many different ways calculating things. But before I say anything, there's a wedge here, up, down, up, down, up. So I'm not so sure we're gonna keep going. We might need to pull back a little bit before going, or if we get another bull bar, then we're definitely going up here. I don't like what's going on here, but I'm still long, and I'm not going to exit this long. I'm still expecting market to follow through here. Anyway, yeah, so I put them together. I try to compute like a computer, okay? What did I see that I'm not seeing? But really everything you need is in these bars. Obviously, we made a higher low. We pulled back. We took out that neckline. Buyers are buying. No one's selling here. You see bar 28, keep buying. You can even measure right from here. So you can take the whole thing, or you can take this. That will be your 1-to-1. From here, you can go for 2-to-1. But I'm definitely going to scalp there. If I see them going, I might buy these bull bars. I would be expecting that probably. But here I'm measuring this small trading range, okay? So I'm not measuring the breakout bar. So many different ways to measure, right? If you're measuring this, I'm not going to take this, right, because market came down. I'm going to take the close, and I'm going to take that bar. That's a 1-to-1. See? There's always a 1-to-1 that you should be able to see and grab, no matter where you enter. This is way too high. Bars are getting smaller. It's kind of going sideways and up. So it's still bullish. One more bull bar, it could put us into this area. So you have possible high one setting up again. We need a bull close. I don't like the way the 38 closed, obviously, but that is the first short if you start to count from the new high. So if you're bearish, this is the first short, okay? We might still need to go back up to get the second short. But we are so high, buyers are hesitating. So there might be some buyers here, might show up one more time. But if the bears start to make money selling, you have to think of, okay, this is the first short because I'm counting from here. Where can they start to fade and the buyers could show up? Could be right around here. So we might need to go back up. So if you sell now, this is how people get stuck. They sell is they see something. They sell into the support where buyers were there before. And then price goes up, they take a loss. So this is why first sell is never a good idea. Second sell has a much better trader's equation. So we might still keep going higher. Now, let's see how much the market move here. Bears trying to get a 6 point here. Right? Bar 38 didn't close below 6 point. Bar 39 is trying. If they do get it, the first pullback, they might sell and get to the 10 point still. But if they cannot close below 6 point line, then they will not. And this one's accelerating. 10 is right there. I'm not going to sell this because this is a tight channel. This is the first time they're breaking the trend line. Even if it hits the 10 point. Now, can the 40 point above still be reliable targets? Well, if the bears actually get a 10 point, I'm going to invalidate that 40 point. I'm not going to be interested. But the bears trying to sell. failed to take the 9-point, failed to test the 9-point. Look, this one actually failed. Bar 39 came so close, but not able to tag. Minimum, they have to tag the 9-point. Otherwise, bull trend resumes and there is no bear trend. So the 40-point is still reliable. I don't know. But look what happened right there. These bears are not able to profit from this run right now. They still might, but if we start to get a bull close above the 6-point, they will give up. And like I said, you got 2 bull bars, probably buyers here. Bulls trying to close a bull bar back above the 6, invalidate this counter trend, and resume the prevailing bull trend to get back to the 40-point. They're not going to let go that easy. So that's what you're getting here. And possibly there's already 2 legs here. How do I know? Leg 1, pull back, leg 2. So, I mean, it's there. So you have to, if you want to buy again, you have to see a bull bar closing above 6-point line. They can still come down and tag this. It's not so far away, but bulls are trying to prevent that so they can actually get to that 40-point, maybe even get another 10-point above the 40-point. That could bring us to 4,300 area. But I will exit out because this could start a major trend reversal finally. If we get the third bear bar, that's going to be sideways and down. We could actually move underneath the EMA. But I have no reason. This is the first break of the trend line. They're fading. See? That's a failure right there. But it has to close bullish for it to be actual failure. Bulls also buying the pullback. I did say they're probably buyers here. I don't want to sell this. I explained, if I sell this, this is going to pull back on me, which has happened many, many times in the past. So I learned from my mistakes, right? Bulls still trying, so I have to give them room here. So this is how you stay in your long. So there is still room to upside. For bulls, the opening range breakout, just like the bears failed to tag that, but they came so close, which is fine. That's their opening range 1-to-1 measured move target. They're exploiting and swinging into that. So is 42.98, just about 2 points, I guess. Yeah, 2 points an extra tick above the 40-point, which they will reach, by the way, is also target. See how this area is such a confluence area that what market is trying to reach? Oh no, was that here? I think it was right here. No, it was right here. Yeah, then if it's 9-point failure, they couldn't even tag it. What are you going to do? I mean, technically they can still sell this and get another leg down, but you don't know. Right now it failed. So you're counting down from down here. This resumes. You're still counting 40 points. You're still in the prevailing trend up. You just buy. So high 1. So you got a nice high 1 here. Maybe this was high 1 and high 2, but this is high 1. So the bull's still pushing this higher. Market is an inertia. It wants to stay in the same direction until something else happens. That something else fell short. But these bears, they want to prevent a breakout they want another leg down. Technically, they can still sell and get down here, but the problem here is bar 40. It's a very strong bull bar. It's a tight trading range, but it is a strong bull bar. And bulls had a fade of the first breakout of the trend line. So they want to test the high of 37 before they even allow bears again. But chances are we will break out of there because we're so close. I am trailing my stop, and I'm looking for market to get the 40 point at the minimum. It can actually go even further up high to 42.99, 4,300 to 42.99, 4,300. If bears surprise me here, that's fine, I'll exit, but I have nothing to worry about right now. Can we get another 6 point breach by bears? It is too high, but it's also the second leg test, second leg attempt, I should say, by bears. So this is the 6 point. If they do close, they can easily come down and finally tag that 9 or 10. But there's a head and shoulders now. Watch out. There's left head and right shoulder. If we get that 10 point, 9 point, 10 point touch, then I will eliminate this and we could suddenly start to sell. But the only problem here for bears, we have no gap bar, we have no 3 bear bars. So I'm not expecting any time market moving underneath EMA just yet. This is the second bear leg they're trying to put in. If you think this is too high and they close this bar, you can exit out because it is kind of high and bulls are having a hard time. Now I see a bear head and shoulders pattern here. And you can see bears are trying to put a counter trend. The moment they tag the 9, then you should say, okay, I think we have a new trend, could go to 15, 20. I'm going to exit out. And I'm not going to expect 40 points. Only if we tag. But if we don't, then the second leg will fail. We will trap the bears, and we are going to be in our merry way to the 40 point once again. So I'm still holding this in this mess, even though I see this is too far up high. Now, right around here, if the bulls actually breach this left shoulder, this is the left shoulder. They already breached it with that left shoulder, complex left shoulder, head. First bull bar, rejection. If we get another bull bar breaching, then we continue to go higher. This head and shoulders become invalidated. I'm watching. Bears did close another bar, but if they cannot get a follow through, 40 point above is still target. If bears really can show me something here that I can sell, I'll sell, but there's nothing here. Not yet. Okay. They closed the 41. That's something. Now they're still trying. Here we go. Maybe that's the second sell. Okay. If they get this, nope. That's not good enough. One tick failure is a one tick failure. Okay, done. It's tested. So I am not interested in this level anymore. And Bears done a great job here. They got their reward. That's the second entry short. It now can continue down. So I'm going to make a decision here now. And anybody who's upset here bought will buy here. So I'm going to buy here and I'm going to break even and exit out. I can hit exit and I could take, this would be $137 and well now $150 loss, but I'm not going to do that. So I'm going to wait for this to come down 10 points. I'm going to accept that bears got their second leg. And this is a head and shoulders pattern. There's a neckline. I'm going to buy somewhere here. As this goes up before coming down, I will break even there. So I'm in with one contract. I added 2 contracts to 42.83. I'm going to see if I can actually buy into this profit taking possibly at 10 point and break even. You got a 22, 32, 42. You got a 20 bar gap. Okay, get rid of this. You got, this is the neckline of the head and shoulders. You got a 20 bar gap here. So the first touch of the EMA, probably buyers waiting. So I already bought and I just broke even. So I'm out now. I lost nothing. In fact, I made money. See what, you want me to repeat what I did there before I go? So the market came down. It was rough, but the second leg actually reached 975. So I had several orders, one at the 10 point, okay, one a little bit higher. I got in with the one higher and I canceled this one. Okay, so now I added 2, there are 2. I canceled that one. As it went up, I just exited out. So I'm done now. This is how I fix the runner, because this can now come down. Okay. I'm no longer interested in, but market still can go up here, but I don't care about this anymore. This is no longer. Now, what do we have targets? Opening range, measured move target. 2R, 66% pullback. We're kind of at the 50, we're still at the 50% market is deciding. I think that's the hang up here. Yeah, look, we're not above the 50%. That's the problem. We have no consecutive bars. So can we still get up here? Well, resistance, that's a good resistance, also breakout test, and we know market is trying to get there. That's fine, but bear is now getting a trend to the downside. It's a small trend of nearly 10 points. They're now looking for 15 and 20 points, and they want to reverse this, and there's a head and shoulders pattern. So you see why I exited with that pullback? I bought into the 10-point bear profit taking, and I utilized that area with a bounce and quit my trade. So, I mean, market could still get up here, but we're in a time that we might need to maybe test underneath the EMA a little bit, maybe 3 bars closing below the EMA, and the buyers can still show up there because this is still support after all. We could still find buyers underneath the EMA, but if we start to sell for some reason very fast and start to get a gap bars and separating from the EMA, first pullback, bears will sell and try to come back down to open of the day. So it's lunchtime. I'm going to sign off, take a break, get some lunch, and then come back and see if I can trade in the afternoon. But at this point, I am done. Here's another thing. If bulls want to swing, we really need to test this EMA or underneath the EMA. Look for bar 48 or 50. Okay, coming down, breakout test, and we could swing once again right in here. So there is no gap here. Now we do have 3 bear bars. Okay, that's good. There's a small gap there, but it may not be enough to sell the market, okay, strongly. Like, I don't know. This is head and shoulders, but head and shoulders patterns can fail. If it doesn't sell, we just reverse right back up. Right now, they're selling the pullback to the neckline, as I said they would do. They're now trying to close below the EMA. The only time that they're going to be selling if they see a gap bar underneath the EMA and another bar opening bearish and separating from the EMA. And the first pullback to EMA is a good bear flag. Sell, possible another bear flag. Market could bring us back to the open of the day. But if we don't get it and we trap the bears here, we could go right back up again. Okay. But I would be looking for a new 10 point, 15 and 20, 30, 40 points to the upside. The counter trend for bulls would start to count from the new pivot level. So they're selling now. So the bears took over. They're getting a midday reversal. This final flag for bulls kind of failed. Finally sideways and down, but I would be careful here. If the breakout test fails, bulls can show up here one more time. Okay, so we have a gap bar and we have a sell to close bar, but it has to close bearish and it has to separate from the EMA. We could have a 3 bars underneath EMA and the bulls can still show up. So hopefully you guys actually exited, and anybody who's actually selling here, right? So you would have 1-to-1. So we got the 1-to-1 right there. They might be looking for a 2-to-1, but they need to close a bear bar here, follow through, breakout underneath the EMA, and a follow through, retest and follow through. That would create a bear flag, but I don't know. So this is a 20 bar gap first touch. They're testing underneath the EMA. They can start to show up, and the bulls can start to show up here as well. So if they close a strong bull bar, there will be buyers wanting to test the 50% of this bear leg pullback. If any sellers, there might be up here, and we may not see sellers all the way up here as well if we get a strong bull bar closing above the EMA. So micro double bottom, 43.44, and bulls want a strong bull close inside bar, and they want to buy that bar and go up high and test the 42 high, or 41 high, or 39 high. This is where you can start counting for bulls. There's a gap here. This is still support. There's a gap here. If the bears close this gap, it's good for them. So we have 1 bar close below EMA. If we get the second bar close below EMA, that's fine. If we get the third bar close below EMA, bulls are going to try to trap you. Be careful. So there might be buyers here, or we're going to close a bull bar and then we're going to keep going higher. This is where a head and shoulders pattern would fail. So hopefully no one got stuck here. We saw that 6-point close with 41, and then they bulls failed, and we kept going. That's where I exited. I'm sorry, I didn't exit. That's where I bought with 42, went up, exited, and then it came down. So I'm flat right now. I want to buy again, but I'm not so sure. So, all right, you guys have a great day. I will see you guys tomorrow afternoon. Tomorrow morning, Al Brooks is going to be in the room. I'll take over sometime around 12:45 p.m. after lunch. And then I come back on Friday morning. And that's it. Have a great day. All right, so we have a bar closed above the EMA. If we get a bear close, strong bear close, just watch out. I think the bulls still want to get back up to here. If we get a bear bar close, that'll be maybe a bear flag due to the 3 bear bars. But this is the second leg at the EMA, and the bulls are trying to trap the bears trying to sell. So this has a potential of going right back to the 42 high, if not all the way up. So just look to see if bears are getting trapped. If bears are not getting trapped and we get a bear bar, this is where they want to come down and test 79, 42.79. If we suddenly get a strong selling, the market is going to move all the way here, possibly even all the way down here. It could move because we're kind of a trending trading range. So we could end up coming back down here. I don't have that bar, so I don't want to sell.